what I have written? Can you see? Income of other person to be includable in the total income of the assessee. But this chapter name is too big, no? Hence, in short, we call it clubbing. Clubbing means to add, to include. Clubbing, meaning of clubbing is what? To add something or to include something. Okay. So, whenever you will calculate your total income, no? In your total income, you are going to show your incomes. But the income of other persons will also be included in the computation of your total income. Meaning, you will be liable to pay tax on the income of other persons. Wow, sir. I don't find it comfortable to pay tax on my income. Now they are telling me to pay tax on the income of other persons. And this is bad, no, sir. They should not be charging tax on income of other persons from me, no? Hello? But still, income of other persons will be taxable in your hands. Why? Reason being very simple. This was your income only, which you shifted on the name of other person. Now the place where you have shifted, no, from that place it is again coming back to the place where it should be. So you shifted your income, we have clubbed it. You shifted your income, we have clubbed it. Why did you shift your income? Because you were already an assessee who is earning more than 10 lakhs. Meaning, you are already paying tax, you are already liable to pay tax at higher slabs. Higher slabs means 30%. Now, whatever extra income you are going to get, over and above 10 lakh only will be there, no? On that, how much tax you are going to pay? 30%. So, you don't want to pay that tax, 30% tax. So, what you are doing? You are trying to shift your incomes to others by doing some or the other transactions. Okay. So, what they are saying, the government is saying, if you have shifted your income, for example, 5 lakh rupees income coming from a bank FD. So there is one bank FD on your name. From that bank FD, you are earning 5 lakh rupees of interest for the full year. You know that this 5 lakh is coming to you as your income because FD was your FD only. On that FD, whatever interest will come, that interest is going to come on your name only. Yes or no? And you are supposed to show that FD interest in your total income. 5 lakh rupees getting taxed in your total income, that was your income over and above 10 lakh only. On that you would have paid 30% tax, 1 lakh 50. So what you are doing, you are applying your mind and shifting this 5 lakh rupees of income to someone else. For example, your wife can be there. For example, your children can be there. Your brother can be there. For example, I have a younger brother. Okay. Going to college right now. So I have taken his PAN card. I have opened a bank account on his name. And I am telling the bank to directly deposit the interest on my FD in the account of my brother. So as per my instructions, my bank will credit the interest. As per my instructions, the bank will credit the interest in the account of my brother. Or there is a company, I bought some debentures. On those debentures, I am getting 5 lakh rupees of interest. I have given instructions to the company that don't credit that interest on debentures in my bank account. Take this bank account, this is my brother's bank account. Credit the interest on the debentures in my brother's bank account. Yes or no? Now my brother is a college going student. He is not earning anything. So he is not paying any tax. But now this 5 lakh rupees of income will come in his bank account. Now it will become his income. I am trying to show that this is not my income. See, it is not coming in my bank account. So it is not my income. It is coming in the bank account of my brother. So it is his income. Please charge tax from him. But the government will not be able to charge tax from him. Why? Because my brother is a separate individual. He is going to get 2,50,000 basic exemption limit for himself. Out of 5 lakh, 2,50,000 will be directly exempt. On the balance 2,50,000, he'll be liable to pay 5% tax. Hello? And don't you think that will be only 12,500? And that he is also not going to pay. The entire 12,500 will go for rebate because his total income is not more than 5 lakhs. Getting my point, everyone? So on that entire 5 lakhs which my brother is earning, there will be no tax. So likewise, I have adjusted 5 lakhs in all my family members and near and dear ones' bank accounts who were not earning earlier, so not paying tax earlier. Right now also they are not earning any. Right now also they are earning income, but the incomes which they are earning on their name are not their income. It is my income only which I have shifted to their bank accounts. Yes or no? So right now also they will not be paying any tax on any income. So likewise, in the name of my 4 very close people, I have shifted 5 lakhs. On that 20 lakhs, I would have paid tax 30%. How much? 6 lakh rupees of tax I would have paid to the government. But that 20 lakhs, 5 lakhs my brother is earning, he is not paying tax. 5 lakh my mother is earning, she is not paying tax. 5 lakh my father is earning, he is not paying tax. 5 lakh my sister is earning, she is also not paying tax. In everyone's total income, I have adjusted 5 lakhs. Getting my point? Just imagine if a person like me can do this. In India, what is the population? 140 crores. Forget about 140 crores people. Only 10,000 people from India start saving 1,50,000 tax on their 5 lakhs each. How much the tax revenue will be lost by the government? 1,50,000 saved by one person like this. 10,000 persons out of the total population, only 10,000 people are also doing this. Just imagine how much tax will be there. 1,50,000 into 10,000 on your calculators. 150 crores. Sir, 150 crores tax revenue lost to the government. Will the government allow this thing to happen? Hence clubbing provisions. So this was only one way which I told. There are other ways also in which the tax can be avoided like this. Yes or no? So all those things are identified by the government. All those things are identified by the government, and the lawmakers has made the law of clubbing provisions. All those cases are covered by clubbing provisions. Yes or no? So you are going to do the clubbing provisions. Reason for doing the clubbing provision, you understood? Others' income will be included in my total income because it was not others' income, it was my income only which I shifted there. Correct? So section 60 to section 65. These sections I am supposed to do. Done, sir? Now tell me. 60, 61, 62, 63, 64 and 65. In 64 we are going to do 3 things. 64.1, 64.1a and 64.2. In subsection 1 we are going to do clause 2, clause 4, clause 6, clause 7 and clause 8. If we do all these provisions, the clubbing provisions are over. Getting my point, everyone? Sure. So one by one we will discuss all these provisions. Done, sir? So the first section is 60. So first thing what you are going to do, you're supposed to read this entire part. This was the background which I gave you. Okay, no? You will read this. Done? Read it. Come on fast. So you are not able to see blood? No problem. See, I have provided you the notes, no? These notes you are having. So at home, please read this entire part today. This entire part I have discussed with you in the beginning only. What was the beginning? The background which I gave, why the clubbing provisions are, introduced. The background is given in the first page. Okay, no? Okay, don't worry. Now pay attention. Very first section, if you can see, section 6060. Can you see this diagram? In this, no, if there is a transferor, he has transferred his income to any transferee. Transferor can be any person, transferee can be any person. Okay. So if any transferor has transferred his income to any transferee, but the asset from which the income is earned, the asset from which this income is coming, that asset is not transferred. Without transferring the asset giving that income is transferred. Do you remember? I told the bank to give the interest, credit the interest in my brother's account. I told the company to give the debenture interest, credit the debenture interest in my brother's account. Without transferring what? The fixed deposit, without transferring the debentures. Did I transfer the fixed deposit also to my brother? Did I transfer the debentures also? So without transferring the asset, generating that income was transferred. So section 60 says that the income so transferred without transferring the asset, the income so transferred to the transferee, that income will not be treated as the income of the transferee, it will be treated as the income of the transferor only. So the place from where it is coming to you, it will again go back to the same place. Yes or no? So it came from the transferor only, no? So now it will again go back to the transferor. That will not be taxable for you as your income, it will be taxable for the transferor. As per section 60, this income will be clubbed. One section is over and I already gave you one example. So the interest income earned by my brother on the bank deposits, interest income which my brother is earning on the debentures, will that interest be shown taxable in his total income? The answer is no. Now that will be clubbed in my total income because that was my income only. So earlier how much I should have paid tax? On that 5 lakhs I should have paid 1,50,000, no. So after clubbing also I'll pay 1,50,000. Getting my point? On that 5 lakh I should have paid 1,50,000 tax, no. So after clubbing also I'll be paying 1,50,000 only. So there will not be any loss to the government even if I do that. Getting my point? Now just imagine you become an assessee. You were doing like this. So the government caught you red-handed. That why are you doing this? Why are you transferring your income? If you are transferring your income without transferring the asset, we will club that income back to you. Okay, no? So what will you do to avoid this? To avoid the provisions of section 60, to avoid the clubbing, what will you do? Avoid this clubbing, what will you do? Definitely you will transfer the asset also. Then you will be caught in section 61. So the people who will who will be avoiding section 60 by transferring their assets, they will be caught in section 61. 61 is made for that only. Okay, no? So first of all, this example, no, exactly same example I gave for your section 60. Okay, no? But instead of house property rent, I gave the example of fixed deposit interest. I gave the example of debenture interest. The same way the house property rent can also be shifted without transferring the house property. Did I transfer the house property? No. But I transferred the rent of the house property on the name of my brother, on the name of my spouse, on the name of my parents, anyone. Okay, no? So that case, what will happen? Section 60 will get applied. Now to avoid section 60, I might transfer the asset. Now I will tell the department, sir, you are doing clubbing in my hands. Why? Because I was transferring my income without transferring the asset. No. Now you cannot do that clubbing, sir. Section 60 clubbing you cannot do. Because section 60 will be applied only if the asset is not transferred. See, sir, I have transferred my asset also. Now the asset is not with me. Asset I have also transferred. But if they'll come to know that the transfer was a revocable transfer. Which transfer? Revocable transfer. Then the asset which you have transferred by way of revocable transfer, from that asset whatever income the transfer is deriving, that entire income will also be clubbed. That is given in section 61. And definitely nobody is going to give away their asset like this only to anyone just to avoid the clubbing of section 60. To avoid the clubbing of section 60, will you give away your asset to someone like this? You're not that mad, no. Just because you don't want to show that FD interest in your total income, will you give away your FD to anyone? Not to show your debenture interest as your income, will you give away your debentures to anyone like this? You will give away the asset to avoid section 60. You will give away your asset, but you will still have the control over that asset. Just to show that the asset is given, but that will still be in your control. That is nothing but revocable transfer. Whenever I want, I can take the asset back in my control. I have given the asset on this condition. So whenever I want, I can take the control over the asset. Control lies with me. Take this asset. This asset is yours. I am telling my brother, take this asset. This asset is yours. But wait, the asset and the income, whenever I want, I have the right to take back that asset from you and the income of that asset from you. Whenever I want, I can take back. I can take the control over that asset. I can take the control over the income. So he's just a puppet. Getting my point? He's just a puppet to show the department that, see, now I'm not the owner, now my brother is the owner. If you don't want the asset, don't want the income, then why are you putting such kind of conditions? Give the asset like that only, no? And if you are giving your asset, putting a condition that whenever you want, you have a right to take control over the asset, take control over the income. That is something which arises our suspicion. We are becoming suspicious now. Why are you doing this? See, take the asset. No, after some time, the asset will again come back to me. It will again be retransferred to me. Then if the asset is supposed to come back to you only, then why are you giving that asset? If the asset's income is supposed to be coming back to you only, then why are you transferring the asset? So if there are some conditions for transferring the asset, and those conditions, as a result of those conditions, the asset or the income will be directly or indirectly retransferred to you, then it is a revocable transfer. If there are some conditions at the time of transfer that asset or the income of that asset, you will have the right to take control over it as and when you want, then this is a revocable transfer. Yes or no? And by putting these conditions, if you are transferring your asset, meaning you want to avoid the provisions of section 60, hence you are transferring your asset like this, no? So that the clubbing provisions does not apply. Don't worry, my dear friend. Clubbing provisions will still apply, but now the clubbing provisions will apply under section 60. We have covered these kind of cases in section 60. Now, what is a revocable transfer? Please check. The definition of revocable transfer is given in section number 63. If there is a transferor, he has transferred the asset to the transferee. Okay. Shall be treated as a revocable transfer if it contains any provision for retransfer. If the transfer contains any condition for retransfer, directly or indirectly or whole or part of the income or the transferred asset to the transferor, meaning directly or indirectly, the asset or its income will again, either the whole or any part, will again come back to me. It will be retransferred. After these many years, the asset will become mine. Okay, take the income for these many years. After these many years, the income will start coming back to me. So this is what a revocable transfer. It gives in any way to the transferor a right to reassume power. A right to reassume power. There is a condition at the time of transfer that I have the right to reassume the control, reassume the power directly or indirectly over the income or the transferred asset. Then by putting such type of conditions, if I am transferring the asset, meaning the transfer is a revocable transfer. I am giving you this pen today. Take this pen. After 5 years, it will again come back to me. What is this? Revocable transfer. Take this pen. Keep it with you. Okay. But as and when I want, I can take it back from you. Revocable transfer. Take the pen. I will not take it back. It will not be coming back to me. No, it is yours only. But the income of this pen will not remain with you. It will be retransferred to me. That means you are only the puppet. Just to show them that, see, I am not the owner anymore. That fellow, that opposite party is the owner now. Charge tax on the income from him and not me. Getting my point? So after some time, the income will again come back to me. Or I will say, take the asset. Asset is yours only. Okay, keep it. But the income of this asset, I have the right. Whenever I want, I can take the income in my control. Asset still remains with you. So what is the use of this asset if the benefit of these assets you cannot derive? Getting my point? So if I give you one asset and tell you that after 20 years this asset will again be retransferred to me, then it is a revocable transfer. If I say after 99 years, asset will again come back to me, it is a revocable transfer. I don't have to see that for how much period I am transferring the asset, for whatever period I am transferring the asset. After that period, if the asset is again coming back to me, or after that period, the income of the asset is again getting retransferred on my name, then the transfer is a revocable transfer. Did you understand the definition of revocable transfer, everyone? So by such transaction like this, if I am transferring my asset, so from that asset, whatever income the transferee will earn from that asset, that entire income will be clubbed in my hands. Hello, sir. Now I don't have to see that out of this income how much benefit is taken by transferee. Transferee is keeping some income. He is transferring some part of the income to me. So only the part of income which he is transferring back to me will be my income. No. Nothing like that. If the transfer of the asset is revocable transfer, entire income of that asset will be liable for clubbing. I don't have to see that out of that income how much benefit is taken by transferee and how much amount is coming to me. Only that income will be clubbed. No, entire income of that asset will be liable for clubbing. Will you remember, sir? Everyone, pay attention. Now, see, Clubbing provisions of section 61 shall be attracted even if the part of the income from the transferred asset is applied for the benefit of the transferor. Even part of the income is applied. Once the transfer is revocable, entire income of the transferred asset shall be liable for clubbing in the hands of the transferor, not the part which is used for the benefit of the transferor. So from this asset which I am transferring you, from this asset if you are earning 1 lakh rupees, so that entire 1 lakh will be clubbed in my hands. But what they will do in the question, they will say that out of this 1 lakh, only 60,000 was passed on to you, only 40,000 you are keeping with yourself. So how much will you club? 60,000 which you are transferring back to me? No, the entire income, yes. Once the transfer is revocable, the entire income of that transferred asset will be liable for clubbing. Done, sir? 63 you understood. Now, coming to section 62. Exceptions to section 61. 61 is a clubbing provision, no? And 62 is exception to the clubbing provision. Meaning that in these cases, clubbing provisions of section 61 will not be applicable. 61 will apply or will not apply? Will not apply. Will there be any clubbing or there will be no clubbing? There will be no clubbing if these conditions are fulfilled. Number 1, you are a transferor? Yes. The opposite party is a transferee or the beneficiary of that asset? Yes. And you are transferring the asset. And the transfer is not revocable during the lifetime of the transferee or beneficiary. Not revocable during the lifetime of the transferee or the beneficiary. For example, there is one Mr. A and there is another Mr. B. Okay. Mr. A is giving the asset to Mr. B, saying that till the time you are alive, this asset is yours only. Till the time you are alive, this asset is yours only, and the income of this asset is also yours only. The moment you will die, I will have the right to reassume the power over the asset. But till the time you are alive, I will not exercise, I will not have that right. So in your lifetime, if I don't have the right to reassume the power over the asset, so during your lifetime, the transfer is not revocable. Transfer is irrevocable. Hello? I will not revoke the transfer till the time you are alive. Asset will be yours. The income will also be yours. Asset will come back to me during your lifetime? No. Do I have a right to take the control over the asset during your lifetime? No. Then the transfer is what? Irrevocable during your lifetime. But the moment you will die, the asset will be retransferred to me. The moment you will die, I will get the right to reassume the power over the asset. Then it is revocable. But it is revocable after your death, no. Till the time you are alive, it is irrevocable. Hence, till the time the transferee is alive, no, section 61 will not be applied. Wait, only if during your lifetime I don't derive any direct or indirect benefit from your asset. I don't derive any direct or indirect benefit from the income of that asset. If I start doing it, it will become a revocable transfer, no. So will the asset be transferred back to me till the time you are alive? No. Will I have a right to reassume the control over the asset? No. But all the income will come back to me. But the income will be used for my benefit. Then it is not a revocable transfer. It is a revocable transfer only, no? Hello? Then it is a revocable transfer only, no? When it will not be treated as a revocable transfer during your lifetime. I will not take the control over the asset. I don't have the right to take the control over the asset. During your entire lifetime, the asset will not be retransferred to me. And also, not a single rupee of the income of the asset will be used for my benefit till the time you are alive. Then section 61 will not be applicable. Throughout your lifetime, the asset is yours, the income is yours, should be taxable to you, no clubbing will happen to me. But the moment you die, the moment the transferee dies, will the asset be again retransferred to me? Yes. Will I get the right to take the asset in my control? Yes. The moment that right will come, now the asset's income will be taxable for me. Even if I don't exercise the right and take the asset in my control, will not make any difference. Hello? The moment the transferee dies and I get the right to take the asset in my control, from that time only, the income of that asset will now be taxable in my hands. Will you remember this? This was your first exception to section 61. So transferor has transferred the asset to the transferee, and the transfer is not revocable during the lifetime of the transferee or the beneficiary, then clubbing under section 61 will not be applied. The income of this asset will be taxable in the hands of the transferee only. Will not be liable for clubbing. Section 61 clubbing will not take place. But to do this, section 61 clubbing will not be applied. To do this, the transferor does not derive any direct or indirect benefit from such income during his lifetime. If I start deriving this, then the transfer is no more an irrevocable transfer. It will automatically become revocable. And from that year only, the income will be clubbed. Done, sir? Next one. If the transferor derives any direct or indirect benefit from such income, then such income shall be liable to be clubbed in his total income, even though the transfer was not revocable during the lifetime of the transferee or the beneficiary. Yes or no, sir? If I start deriving the benefit out of the income during your lifetime, then the transfer does not remain an irrevocable transfer. No, it will become a revocable transfer. From that year only, the income will be liable for clubbing. Done, sir? Next one. Now, the transferor has transferred the asset to the transferee, and the transfer was made prior to 1st April 1962. See, this 1st April 1962 is written from the point of view of assessment year 62-63. This was the first assessment year in which the Income Tax Act got applied. So, from the point of view of an assessment year, if you will see, 1st April 1962 is the first assessment year. But from the point of view of the previous year, this same date can be written as 1st April 1961. Previous year 61-62, assessment year 62-63. Hello? So if I say that in terms of assessment year, the transfer is happening prior to 1st April 1962, prior to assessment year 62-63, meaning prior to previous year 61-62. So in terms of previous year, we have to think, okay, no? So in terms of previous year, what will be the previous year prior to 62-63? Yes, previous year 61-62. So prior to 1st April 1961, was this Income Tax Act applicable? No, the Income Tax Act got applied from which previous year onwards? 61-62 onwards. Getting my point, everyone? Income Tax Act started getting applicable with effect from previous year 61-62 onwards, no? Now in this Income Tax Act, it is said that asset is transferred with a condition that it will be retransferred after whatever time. After whatever time. Within 2 years it will be retransferred, then it is a revocable transfer. Within 5 years it will be retransferred, it is a revocable. Within 10 years it will be retransferred. Whatever time, if you are saying that the asset is again going to come back to you, it will again be retransferred to you within this much time, yes or no? Then whatever time it is, the transfer is a revocable transfer because the asset is going to come back to you. Hello, sir? But prior to 1st April 61, when the Income Tax Act, this 1961 Income Tax Act was not applicable, in the earlier Income Tax Act, 1922, there was one more Income Tax Act, Income Tax Act 1922. In the earlier law, when you transfer an asset to someone, giving a condition that the asset will not be retransferred to me for a period of more than 6 years. That means it will be retransferred to me after 6 years. It will be retransferred to me after 10 years. it will be retransferred to me after 20 years. Then those type of transactions used to be considered as irrevocable transfers at that time. So, for example, in the year 1955-56, the asset was transferred saying that it will again be retransferred to transferee. Transferee will get back that asset in the year 25-26. Meaning, can you see, the asset was given for 75 long years, more than 75 years. 55-56 to 25-26, the asset is yours. But in 25-26, the asset will again come back to me, or my legal heirs, if I am not alive. Take the asset today. In 55-56, I said, take the asset today, keep the asset with yourself, but in the year 2025-26, the asset will again come back to me. Or if I am not alive, the asset will come back to my legal heirs. By putting this condition, I have transferred the asset. But when did I transfer? Prior to 1st April 1961. And I told that the transfer is not revocable for a period of more than 6 years. Can you see, the period is more than 6 years only, no? So this type of transfer was not considered as a revocable transfer at that time. It was an irrevocable transfer. Now if the transfer is irrevocable, the income of this asset will not be clubbed. So starting from 55-56 till 25-26, whatever income of this asset will be there will be taxable in the hands of the transferee only. It will not be liable for clubbing, provided during this period I am not taking any benefit out of the income of the asset. If I have started taking the benefit out of the income of this asset, the transfer does not remain irrevocable, it will automatically become revocable. Yes or no? Till 25-26, the asset will remain with you. It will not be retransferred. And neither I will have a right to take the asset back in my control. It will come back to me directly in 25-26. That I am saying in 1955-56. So did I transfer prior to 1st April 1961? Yes. By saying that the transfer will not be revocable for a period of more than 6 years. Yes or no? For a period which is more than 6 years. And during that period, I am not deriving any income of the asset. I am not deriving any benefit out of the income of that asset. Then the transfer is a irrevocable transfer. During that period, no income will be clubbed in my hands. But if the same transfer I am doing, for example, in 2010-11, I gave you one asset in 2010-11, meaning I gave you the asset prior to 1st April 1961 or on or after 1st April 1961. Yes. Now if I am saying that I will not take the asset in my control, okay, till 25-26, the asset will be yours. It will be retransferred to me in 25-26. Till that time, I will not take back the asset also. Bullshit. The moment you will say no, that take the asset for these many years, after these many years, the asset will again come back to me. Yes or no? This is a revocable transfer. Even if the period is more than 6 years, this is a revocable transfer. So the income of this asset, whether I take the benefit of that asset or not, benefit of that income or not, this is a revocable transfer now. Will you remember this? So there are two exceptions to section 61. In both the exceptional cases, if during the time when the transfer was irrevocable, if no benefit out of the income is derived, then then the transfer is irrevocable. There will be no clubbing under section 61. The moment I get the right to take the asset back in my control, yes or no, from that time only the income will be taxed in my hands. Whether that right is exercised or not, whether the asset is again taken in the control or not, will not make any difference. The year in which I get the right to take back the asset in my control, from that year only the income will be taxable. Till that year there will be no clubbing if I am not deriving any benefit out of the income of that asset till that time. Okay, so this was your section 60, 61, 62 and 63. Sir, how many sections we are supposed to do? Sir, 60 done, 61 done, 62 done, 63 done. Now only 2 sections are remaining, 64 and 65, and the clubbing provisions will be over. Sure, sir? Now pay attention. I am going to do 64 subsection 1 clause 2. Pay attention. Clause 1 not there, omitted. 64 subsection 1 clause 1 not there, omitted. Directly we'll start from clause 2. Okay, no? Now there is one individual. The same thing is written there. Don't worry. I'm just writing. Individual. What is the name of the individual? Mr. Krishna. So Krishna is individual. So Krishna, there is one concern. There is one business concern. For example, it can be a partnership firm, it can be AOP, it can be BOI, it can be any business concern, it can be a company also. In this concern, Krishna is having substantial interest in this concern. Substantial interest means greater than equal to 20% profit sharing. If the concern is a partnership firm, HUF, AOP, BOI, concern can be any concern. But Krishna is having 20% or more profit sharing. If the concern is a company, then Krishna should have 20% or more voting rights, 20% or more beneficial ownership in the shares. Yes or no? So 20% or more. Now what if Krishna is having only 15%? Does he have the substantial interest? Still he can have a substantial interest. If 15% additionally held by his relatives, so his 15 plus relatives 15 both taken together becomes 30. Still it is 20 or more, no? So wait. The concern, no, not closely held. Any concern can be there. How come closely held? If that is a partnership firm, will you call it a closely held partnership firm? No, not a company. Forget about that. Any type of company can be there. Okay, no? Not closely held, widely held. Any type of company is there. Any type of partnership, any type of concern is there. Okay? Now that concern, in that concern, the substantial interest 20% at any time can be held by himself or himself plus relative. Now who is a relative? Not defined here. So we'll have to take the definition given in Income Tax Act. Who is the relative? Spouse, siblings, brother, sister. Yes or no? Then lineal ascendant, lineal descendant. Sibling means brother or sister. Now tell me, can you yourself have substantial interest in the concern? Yes. Can you along with your relative have substantial interest? Yes. Meaning that you are only having the substantial interest. When this substantial interest should be there? Beginning of the year, end of the year, middle of the year, any specific time of the year, or at any time? at any time. Not necessary in the beginning, not necessary in the end. The substantial interest should be at any time. Even for a single day, it is sufficient. At any time during the previous year. So, substantial interest at any time during the previous year. Yes or no? Either Krishna will have alone or Krishna will have this substantial interest 20% or more along with his relative. Who are relatives? Spouse, brother, sister, lineal ascendant, lineal descendant. Now from this concern, what this concern is doing, Krishna is influencing this concern. Substantial interest means Krishna can now influence the concern. Now from this concern, Krishna was supposed to get, he was supposed to get 10 lakh rupees of income. So he is exercising his influence now. Due to that substantial interest, he will now exercise his influence. He will tell the concern, how much you are supposed to give me? 10 lakh. Yes or no? As what? My salary, as my commission, whatever remuneration coming to you is 10 lakh. That is my income. Yes or no? But don't give me that income. See, don't give me that income. Instead of giving me that income, give that income as a remuneration. Remuneration to my spouse. Spouse. Whose spouse? Krishna's spouse, Mrs. Krishna. So to Mrs. Krishna, if the remuneration will be given by the concern, don't you think that the remuneration will go back to him only? Who is Mrs. Krishna? Your wife only, no? Do you live apart or you stay together? You stay together only. Your wife only. So the concern would have given you 10 lakh rupees on your name. So 10 lakh coming on your name in your control. But you had to pay tax on that, 30%. Hello? So you applied your influence on the concern and told the concern to give that money, same 10 lakh rupees as remuneration to your wife. Taking that income to my home in my control but on my name. That is not better. Taking that income to my home in my control on the name of my spouse will be more better. Yes or no? Now that income will be treated as my spouse's income. My spouse will pay how much tax? Only 1,12,500. Only 1,12,500. And if I follow 115 BSE for my spouse, he'll pay less also. And if that entire 10 lakh would have come on my name, I would have paid 30%, 3 lakh rupees tax on that. So paying 3 lakh is better, or on the spouse's name paying only 1,12,500 is better. So I am saving how much? 3 lakhs minus 1,12,500. I am saving 1,87,500 tax. A person like me can do this. Just imagine how many Indians can do that. And see, the remuneration which is given to the spouse is not because of her professional or technical qualification, experience, knowledge, etc. The remuneration is given without. Remuneration is given without any professional or technical qualification, experience, knowledge, etc. So why that remuneration will be given? If she does not have any professional or technical qualification, experience, etc., without having that professional or technical qualification, experience, knowledge, etc., why the concern is giving that remuneration to her? There has to be some suspicion. Why the concern is giving? Mr. Krishna would have applied his influence because of substantial influence, and he would have told the concern not to give him the income, rather his income should be given on the name of spouse. Now whatever remuneration the spouse will get, that entire remuneration will be clubbed in the hands of Krishna. 64 subsection 1 clause 2. Done. This will be applied. Getting it? But this remuneration will be clubbed only if the spouse is not deriving that remuneration because of her qualification, experience, etc. Yes or no? If she is deriving that remuneration because of her professional or technical qualification, etc., then this remuneration will not be liable for clubbing. She is bloody working, and for her work which she is doing, she is getting that remuneration. I am not doing anything. Just because I am having a substantial interest, this should not be clubbed in my hands. Getting my point? She is working there, and to do that work, whatever requisite qualification, etc., is required, she is possessing all of them. And for her work, for her qualification, for her professional or technical skills, experience, etc., which she is using for the work, and for that work she is getting that remuneration. I am not doing anything, so no need to club it. Getting my point? Everyone? Now read this part. Come on. Done. The entire point is explained. This entire point. Please read it. The presentation is done in a better way. That's it. Who is this? Krishna. He is having a substantial interest in a concern, meaning 20% or more. Voting rights, if the concern is a company, 20% or more. Profit sharing, if the concern is any other concern other than a company. Then this substantial interest should be at any time during the previous year. Substantial interest of the individual or substantial interest of the individual plus relatives can also happen along with relatives. Who is the relative? Spouse, brother, sister, lineal ascendant, lineal descendant of such individual. Along with them also he can have a substantial interest. Yes or no? Now from this concern, whatever remuneration is paid to Krishna's spouse, and that remuneration will be clubbed in the hands of Krishna only if without professional or technical qualification, experience, knowledge, etc., this remuneration is given to the spouse. Then it will be clubbed. Read the note. If the remuneration received or receivable by the spouse from such concern becomes due as a result of professional or technical qualification, experience, knowledge, etc. of the spouse, then such remuneration shall not be clubbed in the hands of total income of the individual. Then it will not be clubbed. Done, sir? This was 64.1.2. Okay. Now, I will give you one case. See, there is a partnership firm. There is a partnership firm. Okay. Mr. A is there. Mr. A is having 15% profit share in the firm. From this firm, Mr. A is getting remuneration without professional or technical qualification, experience, knowledge, skills, etc. Okay. In that same firm, Mrs. A, she is holding 18% profit share, and from that firm she is also getting remuneration, and this remuneration she is also getting without professional or technical qualification, knowledge, etc. Possible or not? Now, can I say individual and Mrs. A is a spouse? Think from the other way. Can I say Mrs. A is an individual and Mr. A is a spouse? This individual along with the relative having substantial interest. This individual along with the relative having substantial interest. So both have substantial interest. 33%. Yo, more than 20, no. So Mr. A alone is not having substantial interest, but combined with spouse, the total profit sharing is 33%, no. So both are having substantial interest, yes or no? So now Mr. A is an individual, he is having a substantial interest in a concern, and that concern is giving remuneration to his spouse without professional or technical qualification, etc. Can I say this remuneration can be clubbed to Mr. A? Yes, 6412 will be applicable here. Now think from the opposite side. Mrs. A is an individual. She is also having a substantial interest in a firm. From this firm, her spouse is also getting a remuneration without professional or technical qualification, etc. So even the remuneration received by spouse Mr. A will be liable for clubbing under 6412 in the hands of Mrs. A. So remuneration for both of them liable for clubbing. Possible or not possible? Come on, tell me. I have created a case in front of you. This is possible, no? So now my question is, whose remuneration will be clubbed with whom? Three options I am giving you. First option, A's remuneration will be clubbed with Mrs. A. Second, Mrs. A's remuneration will be clubbed with Mr. A. Only one clubbing will happen, either Mr. A or Mrs. A. Yes or no? Only one clubbing will happen. This is your first option. Second option, do both the clubbing, sir. Do both the clubbing. Or third option, don't do any clubbing. Clubbing, cancel. Here also clubbing is to be done. Here also the clubbing is. Why are you doing both the clubbing? No need to do any clubbing. Three options I gave. If both the clubbings are happening, don't do any of the clubbing. Remuneration of Mrs. A should be taxable for Mrs. A. Remuneration of Mr. A will be taxable for Mr. A. No need to do any clubbing. Or, no sir, club this remuneration also, club this remuneration also. Second option. Or third option, any one clubbing should happen. Any one clubbing should happen. Which is the correct option? See, you cannot say that if both the clubbings are happening, cancel both of them. You cannot say that. And doing both the clubbings is also illogical, no? Both the clubbings, avoid both the clubbings, that is not the correct option. Do both the clubbing, that is also not the correct option. So which is the correct option? Any one clubbing should happen. Now whose remuneration should be clubbed? A's remuneration should be clubbed with Mrs. A, or Mrs. A's remuneration should be clubbed with Mr. A. Because section 64(1)(2) says individual and spouse. Nowhere it is written husband and wife. Hello? Husband wife word is not used. Husband is having a substantial interest. Wife is getting the remuneration. So wife's income will be clubbed. If that was the case, then only this one was eligible. Yes or no? Whose clubbing will happen? Wait. Before applying the clubbing provisions of 64 subsection 1 clause 2, don't apply these provisions right now. Without applying the provisions of 64 subsection 1 clause 2, calculate the total income for both of them. Check the total income for both of them without applying this clubbing provision. See, if other clubbing provisions are made applicable, apply those clubbing provisions and include those incomes in the hands of individual. Yes or no? Apply other clubbing provisions if they are applicable. But first calculate the total income of both the individuals. Calculate the total income of both the individuals without applying the clubbing provisions of 64(1)(2). What did I say? Please repeat, please repeat. Calculate the total income of both the individuals without applying the provisions of 64(1)(2). Meaning, if other clubbing provisions are applicable, apply those clubbing provisions. Include those clubbed income in the total income. Yes or no? But don't include 6412 because you are determining that only, no? Now, if Mr. A's total income is higher, no? Don't you think Mr. A has shifted his income to wife? So the remuneration of wife will be clubbed. A's remuneration will be taxable for him and remuneration of wife will be clubbed. Why? Because A's total income is higher. Opposite can also happen. If Mrs. A's total income was higher, then remuneration of Mrs. A was taxable for her. But the remuneration of the husband would have been clubbed. You have to first check the total income. Done, sir? Sure. Now once in this year, for example, what happened in this year, Mr. A's total income became higher. So A's remuneration will be taxed and Mrs. A's remuneration will be clubbed. This happened in this year. So next year what will happen? After that what will happen? Every year, once the remuneration is clubbed in the hands of Mr. A, now in the following years, in all the subsequent years, the remuneration of wife will be clubbed in the hands of husband only. Till the time assessing officer does not decide to do the other way now. So once the clubbing has happened in the hands of one individual, now for the subsequent years also that same clubbing will happen. Yes or no? Wife's income will be clubbed with husband. If that is clubbed right now, for the subsequent years also, wife's income will be clubbed in the hands of husband. Till the time the assessing officer does not have the opinion that now wife's income should not be clubbed. Wife's income should be taxable in her hands only. But now the husband income should be clubbed. So in that year, the assessing officer will now club the income of other spouse in the hands of this individual. Yes or no? But before doing that, an opportunity of being heard will be given to the other spouse. Will you remember? That is a natural justice, no? So if right now Mr. A, remuneration of Mr. A is taxable for Mr. A, and remuneration of Mrs. A clubbed in the hands of Mr. A this year. So all the subsequent years, the same clubbing will be done. And if in any later on year, if the assessing officer wants to club the income of other spouse, yes or no, then he will have to give the opportunity of being heard before doing that other clubbing. Yes or no? This was your 6412. Will you remember this? This entire thing I have written here. Don't worry about this. Entire thing which I have explained now is given here. Please check. Now coming to the next clubbing provisions. Now we are doing 64 subsection 1 clause 4. Very easy. It will be, going smoothly only, but important. As I told you, 64:1(4) says that if an individual is there, individual has transferred the asset to his spouse. Transferred the asset to spouse. Which asset? Any asset other than house property. So he can transfer jewelry, he can transfer debenture, he can transfer shares, he can transfer land, he can transfer any asset, but not house property. Now the asset is transferred without consideration and without an agreement to live apart. So there is no agreement to live apart. And the consideration is also not taken. Then why have you transferred the asset to your spouse? First question. If you have not taken any consideration and there is no agreement to live apart, you both are staying together only, then why have you transferred your asset to your spouse? Tell me, individual. Because from this asset, no, you were earning income on your name. That income was coming to you at your house on your name, on that you were supposed to pay tax, and you are already covered by 30% slab. You wanted that same income in your hands at your home. What is the better way to have that income at your home, in your control, than this? Transfer the asset on the name of spouse only. We are not living separately, we are living together only. So, if the asset is transferred to spouse, asset remains with me only, because spouse remains with me. Income also comes at my house, in my control. So, income is also not leaving me anywhere. By doing this, what I am trying to do? I am shifting my income on the name of my spouse, no? So, don't you think this is wrong? So, what the government did, Section 64, subsection 1, clause 4. Any income from that transferred asset, any income from such transferred asset, the income of that transferred asset earned by spouse will be clubbed in your hands. Sir, why all the assets are covered and why not the house property? See, if the house property is also covered here, no, one income will be taxed twice in his hands. Do you remember that we did one section 27 deemed owners under the head house property? If you have a house property which you transfer to your spouse without adequate consideration, without an agreement to live apart, the house property is transferred. For that house property, you are already a deemed owner. So income of that property is already taxed in your hands. Hello, sir. And if that property is transferred and the clubbing provision is also made applicable on the rental income of that property, that same income will be taxed twice in your hands, no? Once by making you the deemed owner and the second time by clubbing that income. So that income already gets taken care of, already gets taxed in your hands by making you the deemed owner. So we are not concerned about that house property. We are concerned about the other assets now. What if the income of other assets you are shifting now? So for those assets and the income of those assets, the clubbing of this clubbing provision is made. Yes or no? Will you remember? Now tell me one thing. Income of the transferred asset is taxable, not the house property. See this note number 1. Note number 1, I have given that why house property is excluded. The same explanation which I have given you is given in this note number 1. Yes or no? That why house property is excluded. Now, see what they are telling here. Please check. The asset which is transferred to spouse. Income from such transferred asset. What did I say? Income from such transferred. From that same asset, whatever income is coming, that is liable for clubbing. From that same asset. So what will happen, I have transferred my asset to my spouse. I have told her not to keep that same asset with her. I transferred debentures. So if the interest is coming from that debentures, will it be clubbed in my hands? Yes. 64(1)(4) will be applicable. That is interest income from that same transferred asset. But now I tell my wife, don't keep those debentures in your hands. Don't keep your debentures in your hands. Convert those debentures into some other asset. So I will tell her to exchange the debentures for shares from my brother. So give the debentures to the brother and take the shares from him. Now what asset my wife is having? Shares. Is it that asset which I transferred her? Now if she'll get the dividend from that, will that dividend be clubbed in my hands? I will say the dividend is not coming from the shares which I have transferred her. I had transferred what? Debentures. From that transferred asset, from that debentures, if any income is coming, that you club, no? But she is not earning income from that debentures because debenture is not there with her. She has converted the debenture into some other asset. The original asset is converted into some other asset. So the income of that converted asset is also liable for clubbing. There is one explanation, that the original asset was transferred, and from that original asset whatever income is coming, that is liable for clubbing. But if that original asset is converted into any other form, so income from that converted asset will also be liable for clubbing. This is an explanation. If this point is not given, there is no wonder that everyone will dodge this section. Everyone will evade this section. Yes or no? The asset will not remain the same. They will convert the asset into some other form. Getting my point, everyone? So now tell me, if the assessee, meaning the individual, has transferred any asset other than house property to his spouse, income from that transferred asset is liable for clubbing. Not just this income, but if that original asset is converted into some other asset, so income of that converted asset will also be liable for clubbing. Will you remember? Should I move ahead? Hello? Now, note number 3. In order to attract the provisions of clubbing, relationship of husband and wife must exist at the time of transfer as well as at the time of accrual of the income. See, if you see the diagram, I am an individual. I am transferring the asset to whom? Would-be wife or my wife? Wife. So at the time of making the transfer, the relationship of husband and wife should be there, because the asset is to be transferred to spouse. Understanding? And who is earning the income? Who is earning the income of that asset? Who is earning the income of that asset? Spouse. So income is accruing to whom? Spouse. Income is accruing to whom? Spouse. So at the time of making the transfer to spouse. And the income of that asset should also accrue to the spouse at both the times. At the time of transfer as well as at the time of accrual of income. At both the times, if the relationship of husband and wife is in existence, only then the clubbing provision will be applicable. See, I'll give you 2 examples. You will tell me. My marriage got fixed with a girl, and she is my wife or she is my fiance? She is my fiance, okay? Out of love and affection, I transferred one asset to her, even before our marriage. So at the time when I transferred the asset to her, was she my wife? The answer is no. At the time when the transfer was made, she was my fiance. But luckily I got married to the same female, okay, no? And she became my wife. Now she is earning the income of that asset. Will that income be liable for clubbing in my hands? No. Even if the income is earned by my spouse, but it is earned from that asset which I transferred to her when she was not my wife, there will be no clubbing for this income. Will you remember? So, at the time of transfer, the relationship of husband and wife must be present. Yes or no? Now, what happens now? For example, I'll take the second example now. I transferred the asset to my spouse only. Okay? For you, I'm your Anna, no? I'm your elder brother. Okay? So, my wife will be your sister-in-law. Okay? So, initial days, no, we were very happy, peacefully living. We were loving each other. But slowly and gradually, when the time passed, no, you have changed. You don't take care of me. This, that. Every now and then we used to fight. And this happens in every relationship. So it happened with me also. So what your sister-in-law did, my wife, one fine day, she fought with me very badly. She started abusing. She hit me also. So I got very hurt by this behavior. I said, you were not like this earlier. So she said, you also were not like this earlier. You have changed this, that. We have started fighting since then. Now it is beyond my capacity to bear such type of behavior. Okay. Her behavior has completely changed. And now staying with such kind of negative people, instead of that, let us separate. So I told her that I don't want to stay with you. So even she said, I don't want to stay with you. We got separated, divorced. Just imagine, should I ask the asset back from your sister-in-law? Will she give it to me? Even after asking, she will not give it to me. So I did not ask the asset. I said, give me my freedom. India got freedom on 15th of August. No, give me my freedom. Even I want to be free from you. I don't want to take that asset which I gave you. Keep that asset with yourself only. Now tell me, when I was the husband and she was the wife, at that time I transferred the asset. From that asset, when she was earning the income when she was my wife, that income got clubbed. Now we have divorced. We have got separated. Now there is no relationship of husband and wife, but still the asset remains with her. And from that asset she is earning the income. Now the income is earned. Now the income is getting accrued to her. At that time, when the income is getting accrued, is she my spouse anymore? So even if at the time of transfer she was my spouse, but now at the time when the income is getting accrued from that asset, is she my wife anymore? No. Will this income be clubbed in my hands? The answer is no. Relationship of husband and wife must exist at both the times. At the time of transfer as well as at the time of accrual of the income. See, at the time of accrual the relationship was there, but it was not there when the asset was transferred. There will be no clubbing. At the time of transfer the relationship of husband and wife was there, but at the time when the income is getting accrued, at that time the relationship is not in existence. Then also there will be no clubbing. Will you remember this? Sure, sir. This was the Supreme Court judgment which I discussed with you. In the case of Philip John Plaskett Thomas. 4 people, no, one only. The name is like that. Philip John Plaskett Thomas. So in his case, the Supreme Court gave this ruling that the relation, in order to bring this provision into existence, the relationship of husband and wife must exist both at the time of transfer as well as at the time of accrual of income. This is your note number 3. I have deliberately not written the case law names, okay, no? So that you remember the concept. I don't want you to remember the case names. I want you all to remember the concepts. Okay. Now, see, this is Umang sir. What I am doing, I am gifting cash to my wife. And that cash, my wife is investing in bank FDs. And from those bank FDs, she is earning what? Interest. Will that interest be clubbed in my hands? Absolutely yes. Don't you think this is taking place? Original asset transferred was cash. It got converted into bank FD. And from the bank FD, whatever interest will come will be liable for clubbing. Yes or no? That was also a case law which I just discussed. Now see, if I am transferring cash to my wife and my wife is buying one house property from that cash, will I be treated as the deemed owner of this house property? Sir, you should know, we are not talking about house property. See, wait. If I have a house property and I transferred that house property to my spouse, then I will be treated as a deemed owner. But did I have a house property? No, I had cash. I transferred that cash and that cash got converted into some other asset, house property. For house property. For this house property, I am not the deemed owner. So whatever income from this converted asset will be there, no, will be liable for clubbing in my hands. Getting my point, everyone? Sure, sir. Now tell me, if there is one asset which I have gifted to my wife, that is a capital asset. Now my wife is selling that capital asset and earning capital gains. Will the capital gains be clubbed in my hands? See, income from the transferred asset is liable for clubbing. They are not saying only the incomes of revenue nature will be clubbed. Even the incomes of capital nature in the form of capital gains can also be clubbed. Not just the income of that asset of revenue nature, income of that asset of capital nature can also be clubbed. So if the asset is transferred and that asset is sold by my wife and she is earning the capital gains on that asset, even that capital gains is liable for clubbing in my hands. Yes or no? Not just the income of regular nature, but the income of capital nature will also be liable for clubbing. Done? No? Now what happened? No? This note number 7 is very interesting. What happened? I transferred one property to my spouse. Okay. I did not take any monetary consideration from her. So definitely the assessing officer will come and he will say, sir, you have not taken any monetary consideration from your spouse and you both are living together. You don't have an agreement to live apart. So income of this asset we will club in your hands. I said, no, you cannot club this income in my hands. And what reason I gave, Section 64(1)(4) says that if I transfer the asset without taking adequate consideration, then only the income will be clubbed. Nowhere it is written that it should be monetary consideration. Without consideration. I am getting love and affection from my wife. For me, that is an adequate consideration for transferring my asset. How can you say that I have not got the consideration from my wife? My wife is giving me immense love and affection. For me, that is adequate consideration for transferring the asset. You cannot say that I have transferred the asset without taking adequate consideration. Love and affection which I am getting is an adequate consideration for me. So no clubbing will be applicable. This case went to Supreme Court. Tulsidas Kilachand, name of the case. See, only Gujarati Marwadis know, they only think like this. They only do such kind of, bullshits. So sometimes I feel that how they are able to think like that. Even I am a Gujarati person. But sometimes even I am amazed that how my community people are thinking. See, they think out of the box, which nobody else will be thinking. How can you say that I did not get the consideration? The love and affection which my wife is giving me is a consideration for me. So, you cannot say that I have transferred the asset without taking adequate consideration. Hence, no clubbing provision will be applicable. Come on, man. What bullshit you are talking? And this case went to Supreme Court, And Supreme Court gave the judgment in the favor of the department. That department is correct. The clubbing should happen here. The section 64 subsection 1 clause 4 talks about the consideration which can be expressed in money terms. Monetary consideration. So without taking monetary consideration, if the asset is transferred, clubbing is bound to happen. Hello? Natural love and affection which cannot be expressed in monetary terms cannot be treated as a consideration. Hello? So if natural love and affection you have taken as a consideration, that is not treated as a consideration for transfer of the asset. Hence, no consideration is taken. Clubbing will happen in this case also. You cannot say that natural love and affection is a consideration. Got it, sir? This is note number 7, which I just explained. Okay? Now, in everyone's home, there is a mother who is a superwoman. Okay? At my house, my father used to give money to my mother to meet the household expenses and to meet her personal expenses. See, whatever money the father gives to our, moms, that is a pin money in the hands of mother. See, even she is a human, okay? She is taking care of the household. She is a housewife. She is not going anywhere to earn money. So she would require some money from the husband to meet her, personal expenses like dress. She wants to buy sari, she wants to go for shopping, she wants to buy her cosmetics, accessories, this, that, many things are there. Okay. So who is going to pay for that? Who is going to give her that money? Husband only, no? So whenever the husband gives such money to his wife to meet her personal expenses, that money for the wife is known as pin money. What do you call it? Pin money. For the wife, that pin money is not her income, not taxable under the Income Tax Act. There is no income tax on the pin money because it is already out of the taxable income of the husband, which the husband gives to her wife to meet her personal expenses. Yes or no? So that is not treated as income in the hands of wife. Now what every super mom does, what every super housewife does, she saves that money. Instead of spending that entire money, she'll tell the father that I have this expense, I want to buy this, I want to buy that, but she'll not buy. She'll save that money for for some contingencies in the future. My mom used to save that money like anything. Wherever you will put your hand, no, from there you will get 100 rupees, 500 rupees note. Below the bed she'll hide 500 rupees. Below between the clothes also she'll keep some money. In the temple backside of the God's photo frame, behind that also she'll hide some money. Everywhere, wherever, even in the rice boxes she'll put money. Everywhere she'll put some money. And when I was a kid, no, at that time I was very naughty, very naughty. So I used to see that what my mother is doing. My appa used to give the money, no. My mother used to, if my father has given 500 rupees to her, she'll not keep that 500 rupees note. She'll get the change for that. 100 rupees, 5 notes she'll take. And 100 rupees note somewhere in this place, 100 rupee note at some other place, 100 rupee note at some other place. And wherever you will put your hand, no, from there you are going to get some money. And I was aware of this thing, that my mother is doing that. And sometimes she used to take the change of 100 rupees also. Somewhere she used to hide 10 rupees, somewhere she used to hide 20 rupees. So that small currencies, no, 10 rupees, 20 rupees, I used to steal them when I was a kid. And I have been thrashed very badly for that in my childhood. So my mother used to hide that money, okay, just for some contingencies, that if some money is required, all of a sudden where would I go to get the change? So she used to hide, and I used to look that where she is hiding the money. Okay, so I used to steal that money, and with that money I used to go to play this video games. Yes, and this had become my habit. And I used to be in the video game parlors for long durations of time. Hours I used to sit there. I used to have one Pepsi. Okay, used to play video game. And my father one day, he was like very this thing. He was under a surprise that where I am going for the full day. I am not being seen at home. Whenever he comes home, whenever he leaves, after he leaves, I also immediately leave. But when he comes, sometimes I'm coming late at home. So he started inquiring. And he came to know that there is one video game parlor. In that parlor, my son goes and he sits there. So first of all, that parlor, there all the rich kids used to come, who could afford playing video games, costly video games and all. How my son is going there? We are not that rich people. And from where he is getting this money from? He did not ask me anything. But he started, taking the inquiries. One fine day he caught me red-handed, stealing the money. And that day he has thrashed me like anything. And since then till today, it's been almost 30 years now. I was a 10-year-old kid at that time, 8-year-old kid at that time. He has thrashed me, and since then till today, I don't touch money kept by my father or my mother. I'm so afraid of him today also. So I just remembered that thing. So my mother used to, save the money like this. So whenever she'll save this money, This money will be invested somewhere. What my mother used to do, she used to collect all this money. After 6 months, 8 months time, she remembers that where she has kept the money. She'll collect all the money from different places, and she'll make the bundle, and she'll go to the bank and deposit that money in a fixed deposit. Now from that fixed deposit, she used to get interest also. Now pin money saved, invested in some other asset, and that other asset giving income to my mother. Should that income be clubbed in the hands of my father? The answer is no, never. Any asset acquired or purchased by using the savings of pin money, income of that asset is not liable for clubbing. This is Delhi High Court judgment. But you have to prove that the asset was acquired from pin money. Okay, no? That you have to prove. The burden lies on you. That it is not out of the gifted money, it is out of the pin money given by the husband, pin money savings. Got it, sir? Now see, what happens now? Mr. X has transferred one asset to Mrs. X. I have transferred one asset to my wife. From that asset, whatever income my wife is getting, or if that asset is converted into some other asset, so from the original asset or even from the converted asset, whatever income my wife is getting, that income is liable for clubbing, no? Now what my wife is doing, my wife is saving that money, saving that income of that asset. See, the income already gets clubbed in my hands, but the income comes in the hands of my wife. Now my wife is saving that income, accumulating that income, and out of the accumulations, she invests in some asset and buys another asset. From that other asset, whatever income will happen, that is not liable for clubbing. The clubbing provision extends to only the converted asset, meaning the asset which I transferred, from that asset whatever income will come, that will be liable for clubbing. Even the form of that asset, same asset is getting converted into some other asset, then also from the converted asset whatever income my wife will get, that is liable for clubbing. So this clubbing provision cannot be extended to that other asset which my wife is buying out of the incomes which she is saving. So the asset which I gave, from that asset whatever income is coming, that income is already clubbed in my hands. And out of the accumulations of that income, if my wife is investing that accumulated income in some other asset, and from that other asset if she is earning that income, it is her income and it is not my income. That is not supposed to be clubbed as per 6414. 6414 stops at the converted asset only. It does not go beyond that. Will you remember this? So whatever income from the transferred asset is there or converted asset is there, only that income is liable for clubbing. Now out of this income, my wife is accumulating, accretions are happening, this income is getting accumulated in my wife's hand, and she is investing that income in some other asset or property. From that other asset or property, whatever income she is earning is not liable for clubbing in my hands. Will you remember this? All these points are very important, huh? They are being tested in the exams every now and then. Now this note number 10, no, the example which is given here, no, the example and the solution, the same question we are going to solve, same type of question we are going to solve. So with that question, this example will be covered. Don't worry about this. And whatever is written here, no, whatever is written here as a note, that I am going to explain first. Okay. And while explaining, I will take the example and we are going to solve the similar type of question also. Don't worry. Okay. Pay attention. See, this is Mrs. A. She is doing one business. To do this business, from where the money is coming? She is investing her own money. Okay. So she has started one business with her own money. She has to invest a capital. With a capital of rupees 10 lakh. She has started this business. When she started this business was started with a capital of rupees 10 lakh. The business started on 1st of April 2023. Last year only the business was started. This capital is my capital or her capital? My wife's capital or my capital? It is my wife's capital. She has started the business with her own money. Tell me yes or no. Now, by investing this 10 lakh in the business, she would have earned profit for 23-24. Yes or no? She earned a profit of rupees 4 lakhs. Not 4 lakhs, let's say 2 lakh rupees she has earned as a profit. So don't you think that if this profit is not taken out from the business, not withdrawn from the business, this will again be reinvested as a capital for the next year? And that is the reason why we first close the P&L account, find out the profit, and that profit we shift to capital side. We add the profit to the capital and then we tally our balance sheet. Yes or no? Do you remember? What is the reason for adding this profit to the capital? This year's profit not withdrawn from the business, meaning it will form part of the capital. And now this will be invested in my business for the next year as a capital to do the business in the next year. Yes or no? The more profits are accumulated in the business, the more capital is invested in the business, the more scalability the business will have. See, with 10 lakh rupees, I can do this much operations. But if 2 lakh rupees more will come, my operations will increase. I'll be able to do more business. I'll be able to earn more profits. Yes or no? So this 2 lakh rupees profit, if it is not withdrawn from the business, end of the year, it is added to the capital, thinking that for the next year, with the capital amount, this will also be, invested in the business as a capital to do the business in the next year. So next year, whatever business will be done, it will be done for the full year. Whatever business will be done and the profit will be earned for the full year, it is always assumed that the profit for that next year will be earned from the capital of 12 lakh rupees, because 12 lakh was invested in the business in the beginning of the year. Yes or no? So now tell me, as on the 31st March of 2024, what will be my closing capital in the business? Opening capital was 0, sir, because I started the business last year only. Opening was 0. There was no opening balance of capital in the business. No, I started the business last year with 10 lakh rupees of capital. Yes or no? Now, with this 10 lakh rupees capital got introduced in the business. 10 lakh. And 2 lakh was the profit of the business. Opening plus capital introduced plus profit for the year, that is 2 lakhs. Now tell me, how much is the total capital in the business? 12 lakh as at the end of the last year. Now, in the previous year, 24-25, what will be the opening capital? Opening capital will be 12 lakh. Now, assuming that no capital is withdrawn, okay, and even if it is withdrawn, what difference will it make? The government thinks that whatever profit you have earned for this year, no, as on 31st March 2025, it will be seen that the net profit earned by you for this entire year is how much? Yes or no? So for example, the net profit was 4 lakh rupees. So it is always assumed that this 4 lakh rupees net profit for the full year is on the capital which you had invested in the beginning of the year. So beginning of the year, whatever capital which you have invested in the business, from that capital only you have earned the profit for the full year. It is only assumed. Forget about whatever capital introduced in between, whatever capital withdrawn in between. We don't care only. Whatever profit you have earned for this year is from the capital which was there in the business as on the first day of the year. We always assume that whatever capital is there as on the first day of the year in the business. From that capital only, the profit is earned 4 lakh rupees. Got it, sir? Now tell me, whose capital was this? Wife only, no? 2 lakh was her profit only, 10 lakh was her capital, entire 12 lakh her profit. So this 4 lakh will also be her own PGBP income. Now see, I do some changes over here. Last year, she introduced 10 lakh rupees of capital, which was her own 10 lakh rupees. And along with that, I also gave her 5 lakh rupees. 5 lakh rupees gift. Who gave the gift? Husband. Mr. A gave the gift of 5 lakh. So cash gift of 5 lakh given to her. And that same 5 lakh rupees was also invested by her in the business. And when this gift was given, it can be given at any day. It could have been given in the month of April, it could have been given in the month of June, whenever it was given. But in the last year only, that 5 lakh got what? Invested in the business. Now tell me, as on 31st March, if the profit was 2 lakh only, let us keep the profit 2 lakhs only, let us not change that. As on 31st March 2024, what will be the capital now? 0, opening balance 0, her own capital 10 lakh rupees. Hello. And the amount gifted by me also introduced as a capital in the business. How much? 5 lakh rupees. So 10 plus 5 lakhs and plus 2 lakh rupees of profit. So closing capital will become 17 lakhs. Don't you think that this year opening capital will become 17 lakhs? Yes or no? Now in this opening capital, we assume that whatever profit which is earned for the next year is earned by investing opening capital of 17 lakhs only, no? Now don't you think in that 17 lakh which was there as a capital, total capital in the business, in that 5 lakh rupees capital does not belong to her. It belongs to her husband. So out of this 4 lakh rupees of profit, whatever profit which is proportionate to that 5 lakh rupees of capital shall not be taken as her income, shall be the income of the husband only. Because if the husband would have invested that 5 lakh in the business, he would have earned this profit. So this profit would have been taxed in the hands of husband. No. So instead of investing that 5 lakh on his own name, he invested that 5 lakh on the name of wife. Yes. So that the profit of the business does not become my profit. It becomes the profit of my spouse. What do you think? Government is mad or what? Opening capital, total capital in the business. In that total capital, whatever amount you had gifted to the spouse, out of that, whatever capital, your gifted money shown as a capital there, any profit proportionate to that capital will not be your wife's income, it will be your income, will be liable for clubbing. So tell me, from 17 lakh rupees of capital, how much profit is earned? 4 lakhs, no? In this 17 lakh, as on the first day, how much is the capital belonging to the husband? 5 lakhs, no? So on 17 lakh, if 4 lakh is there, on 5 lakh, how much will be there? Come on, tell me. Cross multiply. 4 into 5 divided by 17. 1 lakh 17,647. Entire 4 lakh will not be taxable in the hands of my wife. Out of that, this much will be clubbed in my hands because this much is the profit of her business from the capital which I gave and she invested in her business. Yes or no, sir? Will you be able to calculate this? Sure. But see, this clubbing will not take place if 5 lakh was given as a bona fide loan to the wife. Bona fide loan means legal loan. There has to be a loan agreement between you and your wife, that the amount of 5 lakh is not given as a gift from me. It is given as a loan. So that loan can be interest free or with interest. Will not make any difference. But you have to prove that if that 5 lakh is not given as a cash gift, if it is given as a bona fide loan, then from that, on that 5 lakh, whatever profit you have calculated and you are clubbing, no, that clubbing will not happen. If that 5 lakh happens to be bona fide loan. But that you have to prove that it was your bona fide loan given to the wife. Will you remember this? Sure. Now 6414 over. Now if I'll ask you one thing, simple, small thing, if I'm asking you, tell me, I know that if I transfer the asset to my spouse, now if I transfer the asset to my spouse, whatever income she will earn from the asset, will it be clubbed in my hands? With what intention I transferred? That I want the asset at my home. I want the asset in my control. And also the income of that asset I want at my home. And income to be coming in my control. Yes or no? With that intention only I transferred the asset. Sure. Now what I'll do? If I transfer that to my spouse, they are going to club that income. So I will not transfer the asset to my wife. But still I want to keep the asset at my home, in my control. Still I want to have the income in my control, at my home only. What I'll do, you know, my son has grown up now. His age is of marriage now. I'll find a suitable bride for her, get my son married, and send my son or bring a son-in-law, daughter-in-law. I'll bring a daughter-in-law at my home, no? See, in Indian culture, no, the son don't go after marriage. The daughters come after the marriage. Yes or no? So now a new member will be added at my family, at my home. And she will be my son's wife. I cannot transfer the asset to my spouse, but I can very well transfer that asset to my son's wife, who is a new family member now. Where is she? At my home only. Hello? See, now the families have started, staying separately, this and that. Okay, no? But earlier when these provisions were made, people were thinking like this only, no? So the provisions were made with this intention only. And right now also many families are living jointly only. We are living in big cities, so we are living separately in nuclear families and all. If you will go to villages and small towns, tier 2, tier 3 cities, still people are staying together happily. So my son is staying with me. He is not staying away. So if he gets married, his wife will also come and stay with us in my family, no? What if I transfer this asset, any asset now, including house property? Because see, if I transfer the house property to her, I will not be a deemed owner. Yes or no? She is not my spouse. She is my son's wife. So if I transfer the house property to her, I will not be the deemed owner. So I can transfer the house property also. I can transfer any other asset on the name of my son's wife without taking adequate consideration. Now tell me, where is the asset? Still at my home. It is still in my control. Where the income will come? At my home. In whose control the income will be? In my control only. But the clubbing provisions of 64 subsection 1 clause 4 will not be applicable now, because the asset is not transferred to my spouse. So don't worry. We'll cover you in clause number 6. If you transfer the asset without taking adequate consideration, any asset including house property. Now here, including house property, yes or no? Any asset including house property, if you are transferring to your son's wife, from that asset, whatever income your son's wife has earned, that entire income will be liable for clubbing in your hands only. Because we know that why you have done this transfer. Because you did not want the provisions of clause number 4 to get attracted. So you took the other way. Getting my point, sir? So any asset, sir, any asset transferred to son's wife. Any asset means any asset, including house property also. So if an individual has transferred any asset to son's wife, see, sir, can I transfer to my daughter's husband? No. Daughter's husband is not staying with me. My daughter will go away after getting married. So will I want my asset to go away? Just like my daughter went away. I want the asset in my control. See, if I give the asset to my son-in-law, that asset will not be in my control because my own daughter is not in my control now. So how the asset will be in my control? Getting my point? And by the way, son-in-law is not going to come and stay with me at my house. There are exceptional cases where they stay, but those exceptional, we are not talking about the exception, no, we are talking about the general thing. Getting my point, everyone? So tell me, if the asset is transferred to son's wife, without taking adequate consideration, then whatever income from that asset is earned by son's wife will also be liable for clubbing in the hands of the individual. 64(1)(6). Will you remember, sir? Hello, sir. Will you remember, sir? Wait. Why this is done? Because you did not want this clubbing to get attracted. Hence you did this. Okay. Now whatever points which we have discussed now in class number 4, copy paste all the provisions ditto applicable for class 6 also. I will not discuss them anymore. A relationship of father-in-law, daughter-in-law, mother-in-law, daughter-in-law should be in existence at both the times, at the time of transfer as well as at the time of accrual of income. What if the original asset is transferred and the form of that asset is converted into some other asset? Hello, if the cash is gifted, that cash is invested in some other asset, from that other asset whatever income is coming, natural love and affection, this and that, whatever discussion we have done in class number 4, no, each and every discussion applicable here. See, the last discussion which I did, this discussion, even this discussion will be applicable. Now instead of my wife, can I give the money as a cash gift to my son's wife? Yes, and my son's wife is investing that money in her business. So whatever proportionate profits relating to my money, which is shown as her capital in her business, yes or no? Whatever profits which will be relating to that amount, no, will also be clubbed in my hands. Yes or no, sir? So each and every point which I have discussed in clause number 4 equally applies for clause number 6 also, with minor modifications. Instead of spouse, everywhere the word will be son's wife, daughter-in-law. Done, sir? Should I move ahead? Now see, if I transfer the asset to my spouse, clause 4 will be attracted. So will I transfer the asset to my spouse? No. So I tried to transfer the asset to my son's wife. Then also clause 6 will be applicable. Then also the clubbing will happen. So will I transfer the asset to my son's wife now? Now to avoid both these provisions, what I will do? This is me. If I am transferring to my spouse, 64 subsection 1, clause 4 gets attracted. If I transfer to my son's wife, 64 subsection 1, clause 6 get attracted, and the income will be directly clubbed in my hands. Yes or no? So I will not transfer the asset to my spouse now. I will not transfer the asset to my son's wife. What I will do, you know? I will transfer the asset to any other person and tell that person to use the income for the benefit of my spouse or benefit of my son's wife. Can I do this? And if I'm doing it, why I'm doing it? To avoid the provisions of clause 4, to avoid the provisions of clause 6. Getting my point? So I will say that, see, I have not transferred the asset to my spouse. I have not transferred the asset to my son's wife. What I have done, I have formed one partnership firm. I have formed one company. And now that asset I have transferred on the name of my company. Company is a separate person, no? Am I giving the asset to my spouse? Am I giving the asset to my son's wife? I'm giving the asset to partnership firm. I'm giving the asset to the company. Which firm? Which company? Bloody, I'm not going to go and give this to any company on which I don't have a control. Definitely I myself will create a company. I myself will create a partnership firm. But in the eyes of law, that is a separate person, no? Now, the moment I'll give the asset with a condition that out of this asset, whatever income comes, 20% will be kept here in the firm. Rest 80% will be used for the benefit of my spouse or son's wife, or should be given to them. If it is given to them, no, ultimately coming to me only. So did I avoid the provisions of clause 4 and clause 6? Yes. By doing this, I will be covered by clause number 7 and clause number 8. If I have transferred my asset to any person, without adequate consideration, then the income of that asset earned by that person and utilized for the benefit of my spouse or son's wife, whatever income of that asset is there, no. The income of that asset earned by such other person and utilized for the benefit of my spouse or son's wife, to that extent the income will be clubbed in my hands. The balance which is not used by that person will be taxable in his hands only, that person's hand. Yes or no? So if I am transferring one asset, from that asset 1 lakh rupees of income is coming. So entire 1 lakh will be clubbed in my hands? No. If I have told the firm to use 80% of the income for the benefit of my spouse or son's wife, meaning 80,000 only will be used for the benefit of my spouse or son's wife? No. So only the 80,000 rupees income which is used or utilized by that person for the benefit of my spouse or son's wife, only to that extent the income will be clubbed. The balance 20,000 kept by the person, not used for the benefit of my spouse or son's wife, cannot be clubbed in my hands. Will be taxable in the hands of that person only. Will you remember this? Clause number 7 done, clause number 8 done. All the clauses of section 64 subsection 1 are done. Sure, sir? Will you be able to identify these clauses? Perfect. Now pay attention. Now we are coming to the next part. Minor's income. Have you heard about minor? I am very much determined that I don't want to pay tax. So I am trying to avoid the tax by doing this, by doing that. Whatever ways I can do, I am doing. I want the income at my home. My ultimate intention. I want the asset with myself only. I want the control over that asset. I want the income of that asset at my home, and I want the control over the income of that asset. Yes or no? So to do that, I was transferring the asset to spouse. To do that, I was transferring the asset to my son's wife, or I was transferring the asset on the name of any other person so that that person can give the benefit to my spouse or son's wife. Yes or no? Everywhere I was caught. So now I will do family planning. I will have a baby. Okay, my son or my daughter, minor child. separate individual. I am a separate individual. My child is also separate individual. What if I transfer to spouse? They do the clubbing. What if I transfer to my son's wife? They do the clubbing. What if I transfer to my own minor child? Still the income will remain with me. Asset will remain with me because minor will stay with me till the time he is minor. Usually till the time you are minor, you don't leave your family. No, you leave your family once you become major. Majority of the cases, normally it is seen till the time you don't cross the age of 18. You don't leave your parents, you stay with your parents. Many of us, right now I am 39, 38 years old, I am still with my parents. Hello, I have not left them. Just forget about, 18. In India, usually, we don't leave our parents till the time we mature. Once we mature, then we, have other stuff also. We can go away, we can go here and there. But till the time we are minor, we stay with our family only, with my parents only, So what if my father gives one asset to me? What if my father transfers his income on my name? That income will remain at my home only. So my father can shift his income on my name, on the name of minor, no? Understanding what I am trying to tell you. If the income is transferred on the name of minor by transferring the asset or by transferring the income on the name of the minor, where that income is going to go? Minor is with me only. So asset is going to remain with me only. Income of the asset is going to remain with me only. Can I do that? Can I do that? Yes, I can do that. So to stop me from doing that, clubbing provision 64(1)(a). Minor's income will also be liable for clubbing. Hello, sir. So whatever income the minor is earning, even that income will be clubbed in the hands of parents. Now wait, whatever income minor is earning will be clubbed. But that should be the income which you have transferred him, no? Not the income which your minor himself is earning. Can your minor have a special skill, talent, knowledge, etc.? So from his special skills, talent, knowledge, etc., he is earning on his own. Should that income be clubbed? The answer is no. That income should not be clubbed. So any income of the minor which he is earning from his special skills, knowledge, talent, etc., shall not be liable for clubbing. That income is not liable for clubbing. That is minor's income taxable for the minor. Will be included in the total income of the minor. Yes or no? Who will pay tax? How the tax will be paid? That is not your business right now. First of all, tell me, is it your income? No, it is the income of your minor child. So should be shown in the total income of the minor. Should not be clubbed in my hands. Hello? Any other income which the minor is earning, definitely that is the income which you have transferred him. Because that is not the income which he is earning out of his skills, talent, etc. No. So that income you must have transferred him. All the incomes. What did I say? All the incomes except these incomes, except the incomes from skills, etc. Special skill, knowledge, experience, talent, except from this, all the incomes of minor will be liable for clubbing. 64(1)(a). In whose hands the income will be clubbed? Amma, Appa, both, or anyone? Anyone. Either in the hands of father or in the hands of mother. But in whose hand? That parent whose total income before applying the clubbing provisions of 64(1)(a). So I have to calculate the total income of both father and mother without applying 64(1)(a). See, if other clubbing provisions are getting applicable, I have to apply those provisions. Yes or no? But without applying 64(1)(a) clubbing provisions, I have to first calculate the total income of both mother and father. The total income of the father is higher. Then the minor's income will always be clubbed in the hands of father. Once clubbed in the hands of father, always in the hands of father. Till the time the assessing officer does not decide to club in the hands of mother. Yes or no? And if he wants to do that, an opportunity of being heard will be given to the mother. That from this year onwards, we are not going to club the income in the hands of father. Madam, in your hands we are going to club. Opportunity of being heard will be given. Say whatever you want to say. But once the income of a minor is clubbed in the hands of one parent, every year it will be clubbed in the hands of that same parent only, till the time the assessing officer does not decide to club in the hands of other parent. Yes or no? And if he decides, he has to give opportunity of being heard to the other parent. Getting my point, everyone? Sure, sir? Now pay attention. This can happen only if both the parents are alive and the marriage also subsists. Then in the hands of any one parent whose total income is higher. But what if both the parents are not alive? One is died. Or both are alive. But they are separated. Then the marriage does not subsist. No. Marriage of the parents does not subsist. In that case, in whose total income the minor's income will be clubbed? It will be clubbed in the hands of that parent who has the custody of the minor, who maintains the minor. Yes or no? So if the marriage subsists, then the parent whose total income is higher. And if the marriage does not subsist, meaning any one of the parent died, or they are not dead, both are alive, but both are not living together, they are separate, then the income of the minor will be clubbed in the hands of that parent who is maintaining, who has the custody of the minor. Yes or no? What if both the parents are died? Then legal guardian. Getting my point, everyone? Now, whenever the income of the minor child will be clubbed in your total income, up to 1500, what did I say? Up to 1500 rupees of that income per annum, per child will be exempt under section 1032. For all the minors whose income is clubbed in your total income, you are going to get exemption under section 1032 up to 1500 per income. No, this is total per annum exemption. So if 5 incomes are getting clubbed, any one income exempt up to 1500, rest all the incomes taxable fully for you. Hello sir, for every income you are not going to get 1500. All the incomes total 1500. So you can take that out of total 1500, or any one income up to 1500 you can exempt. Getting my point? But this exemption will not be available if you are following 115 BSc. So 1032 exemption is available only if you shift out of the default tax scheme. If you don't shift out of the default tax scheme, if you follow 115 BSc, the exemption available under section 1032 will not be available. So can you see here? Exemption, where is the exemption? Here. Exemption under section 1032 not available if assessee follows 115 BSc. Yes or no, sir? Will you remember this? Sir, will you remember this? Should I move ahead? Okay, pay attention here. Pay attention. Now, if there is a minor and on the name of that minor you have transferred your house property without taking adequate consideration, don't you think you are the deemed owner of that property? That income is already getting taxed in your hands. For that property, if you are a deemed owner, income is already getting taxed in your hands, will you do any clubbing of that income? No, no need to do, because you are already the deemed owner. But do you remember that if the property was transferred on the name of handicapped minor, or if it was transferred on the name of minor married daughter, then you are not the deemed owner. Why? Because in that case the clubbing provisions apply. You are not the deemed owner, don't worry. So under the clubbing, this income will be covered and it will always be taxable in your hands only by clubbing provision. But wait, if handicap minor is there, what? Handicap minor is there, no income of the handicap minor is liable for clubbing. Income of the handicap minor is not liable for clubbing. Meaning, sir, see, you have not transferred your income on the name of handicap minor to avoid the taxes. Rather, we think that you have transferred your income on the name of handicap minor to safeguard his future. That God forbid if something happens to you, no, at least there is some income coming to your minor, and as a result of that, he is financially stable. So for his financial safety, financial stability, you might have transferred that income, thinking that we are not clubbing any income of the minor, and neither the house property. For that house property, you will not be treated as a deemed owner if it is transferred to handicap minor. But what if it was a minor married daughter? So if minor married daughter is there, you are transferring the house property. For that house property, you are not the deemed owner. Why? Because under the clubbing provision, nowhere it is mentioned that minor should not be minor married daughter. That means even if the minor is a minor married daughter, all the incomes of minor married daughter will be liable for clubbing in your hands only, not in the hands of her parents-in-law, but in the hands of her parents only. Which incomes? All the incomes, even the incomes of the property which you have transferred to her. So for that income, if already clubbing takes care, then why are you making yourself a deemed owner again? Don't make yourself a deemed owner, no. But see, for other minors, you are a deemed owner for this property. So this income will not be clubbed in your hands. So now there are so many things which have come up. So till the time I will not make a particular table for you now, classifying all these things, you will be confused. 3 types of minors will be there. How many types of minor? 3 types. One, normal minor. Second one is handicap minor. Third one is minor married daughter. Okay. So let's make one table. This is any other minor. Last column. This is minor married daughter. This is handicap minor. Yes or no, sir? First income, pay attention. Income from house property transferred without consideration. Will that income be clubbed? Yes or no? No clubbing will happen for this income in the hands of handicap minor, because handicap minor, no income is clubbed. Will that be, in that case, will you be treated as a deemed owner? No, you will not be treated as a deemed owner also. So that income, neither you are a deemed owner nor it will be clubbed as per 64(1)(a). Will that income be taxed? Yes. that will be income of your minor child, handicap minor will be taxable in his hands. For you, you are not a deemed owner also, and for you it will not be clubbed also. Will you remember, sir? So what I'll write here? Tell me. Section 27 cross mark and section 64 1A clubbing. This is also cross mark. Done, sir? Now tell me, if that same property transferred to minor married daughter, will you be the deemed owner over there? The answer is no. You are not the deemed owner. Meaning, in this case, there will be clubbing. Clubbing will happen. Since clubbing is happening, hence you are not the deemed owner. Yes or no? Now tell me, if the property was transferred to any other minor, are you a deemed owner? Yes, sir. You are a deemed owner of that property. And if you are already a deemed owner of that property, will there be any clubbing of that income? The answer is no. See, here what is happening now? In the case of minor married daughter, already clubbing is done. Hence, you are not treated as deemed owner. And here, clubbing is not done. Why? Because you are already treated as a deemed owner. Yes, sir, or no, sir? And here, no clubbing, no deemed owner, nothing. In the case of handicap minor. Done, sir? Next one. Now, income from special talent, knowledge, etc. Minor is earning income from special talent, knowledge, etc. Now don't talk about section 27. We have to talk only about clubbing will happen or will not happen. That's it. Deemed owner concept gone. Property word over. Okay, no? Now tell me, will there be any clubbing or no clubbing? Sir, any type of minor earning such income, it will be income of that minor only, will never be clubbed in the hands of parents. No clubbing will happen, sir. Will you remember, sir? Sir? Now, pay attention. The income coming from the special talent, this income which was coming from the special talent, yes or no? Now what is happening? This income is invested in any asset or a business. Yes or no? And from that asset or business, income is earned. Tell me, income from your special talent is not liable for clubbing. Income from your special talent is not liable for clubbing. But if that income is invested in some business or asset, that income from the asset or business is not coming from your talent, no? Are you earning that income from your talent? No. Income from the talent is not clubbed. But if this income is invested in some business or asset, from that business or asset, whatever income is coming, is that income your minor is earning from his talent or skills? No. So all the income of the minor liable for clubbing. So this income will also be liable for clubbing. Hello, sir. Understanding, sir? So what you will do? 641A, clubbing will happen. Clubbing will happen. This income will definitely be clubbed. But wait, no income of the handicap minor is liable for clubbing. So even this income of the handicap minor will not be clubbed. Will you remember this? So if the income earned by handicap minor is from his special skills, no clubbing. Any other income, no clubbing. Got it, sir? Special skills income invested on his name in any other business, any other asset, from that business or asset income, new income is coming, even that is not clubbed. In case of handicap minor, there is no clubbing. Will you remember? Sure, sir. Wherever the clubbing is done, no, everything is pink. See, clubbing or taxability is there in your hands, everything is pink. But wherever there is no clubbing, it is yellow, yellow, dirty fellow. Yellow, yellow, dirty fellow. So here there will be no clubbing, no clubbing, no clubbing. Done, sir? Here also. No clubbing, no clubbing. Now pay attention. Can I say all other incomes? All other incomes means the incomes which are not covered above. Can there be FD interest? I have kept one FD on the name of my minor. Can there be, dividend on shares? Can there be business income? It can be any income now. I have invested money on the name of my minor, on that whatever income is coming will be my income only. I have transferred any asset on the name of my minor, from that asset whatever income is coming, that is my income only. That will be liable for clubbing everywhere. Getting my point? So what I'll do? All the incomes are clubbed, no? Everywhere it will be clubbed. But here it will not be clubbed. In the case of handicap minor. Why, sir? Why in the case of handicap minor it will not be clubbed? No income of the handicap minor is liable for clubbing, including this income. So in the case of handicap minor, can you see everything yellow, 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 yellow? In the case of minor married daughter, can you see everything pink, pink, pink? But two things at two places it is yellow. In the case of any other minor, can you see everything pink, pink, pink? But two places it is yellow. Hello, sir. You have to remember this. Will you? Now tell me. This was the clubbing. Pay attention. Special skills income, no clubbing. All other incomes, clubbing will be done in the hands of the parent whose total income is higher. If the marriage does not subsist, then in the hands of that parent who maintains the minor. Okay. Now, if the minor is suffering from any disability, meaning the minor is a handicap, no income of that minor will be liable for clubbing. No income of handicap minor is liable for clubbing. Yes or no? Even if it is a minor married daughter, her all the incomes will be clubbed in the hands of her parents only. All the incomes of minor married daughter will be liable for club in her hands only. Okay. Now, House property transferred, from that whatever income is coming, that income will be clubbed in the hands of minor, provided the minor is not a minor married daughter and minor is not a handicap minor. This entire thing we have covered. Now assessee will get the exemption under section 1032 for every clubbed income of the minor. No. For every minor, all the incomes clubbed, total 1500 per annum per minor child exemption he will be able to claim, but only if he does not follow 115 BSc. If he follows 115 BSc, then sir, then whatever income is clubbed will be fully taxable. There will be no exemption under section 1032. Got it, sir? Now see, this note number 5 I have already covered in my table. See this note number 5. Income from special talent not clubbed. But that special income from special talent invested somewhere, from that investment whatever income is coming, that will be clubbed. Done, sir? This was 64(1)(a). Okay. Now the last provision, 64(2). Very easy, very easy. See, this is one individual, Mr. A. He has transferred one asset to the HUF. He is the member of that HUF. Don't you think HUF is a different person in the eyes of law? And also eligible to get 2,50,000. So the government closed all the ways. This was your last way. You wanted to have your income with yourself or not? You wanted to have the asset with yourself, have the control over the asset, have the income with yourself, but you did not want to take the income on your name. That is why this entire exercise we have done, clubbing. So the government closed all the ways. If you transfer to spouse, clubbing done. If you transfer to son's wife, clubbing done. If you transfer to your minor child, clubbing done. Even if the minor married daughter, clubbing will be done. Yes or no? Now what will happen? No. See, you have the last option, that the family where you are the member. Family is yours only. Hindu undivided family. My Hindu undivided family, where myself, my spouse, my children, we all are members. So what if my own property, which was on my own name, giving me income, was getting taxed in my hands at highest rates? What if I transfer that property on the name of my family only? I'll make this property from today my family property. Now whose property? My family's property, not my property, my family's property. Whose income? My family's income. For whom it is taxable? My family. No. Why you are doing this, Because you know that family is a separate person. And even if you have transferred the asset to your family, whatever asset you have transferred, okay, no? Have you taken any consideration? So without taking adequate consideration, if you have transferred your asset to your HUF, why the bloody hell you have done? Why are you having so much love for your family all of a sudden? The asset which you acquired on your own name was giving you income on your name, on that you were liable to pay higher rate of tax. That income you don't want to bring in your total income, but you still want to have the control over the asset, you still want to have the control over the income. Hence you are transferring that asset on the name of your HUF without taking adequate consideration. Then from this asset, the entire income, what did I say? Entire income of such transferred asset, that entire income will be liable for clubbing. 64 subsection 2. Even if the form of the asset is converted, this will be applicable. See that original asset transferred, converted into some other form, that explanation is not applicable only for clause 4. That explanation is a common explanation given under 64. Getting my point? So wherever the asset is transferred, no, original asset transferred from that, whatever income is earned will be clubbed. But if the form of that asset is also getting changed, converted, so any income from that converted asset will also be clubbed. Everywhere we are supposed to do, not just in the case of spouse. Yes or no? Everywhere you are supposed to do that. So now the asset which was transferred, entire income of that asset earned by the HF will now be clubbed in your hands. What is happening? You are transferring the asset to your HF. Are you taking any consideration? No, na? So for you, section 47 applicable. This transfer is an exempt transfer for you. HF is getting the asset from member, means relative. So for HF also, 56 subsection 2 clause 10, gift provisions are not applicable. Gift provisions are not applicable for HF. Getting my point? Because HF getting the asset from the member, getting the asset by way of gift. Member means what? Relative only, no? So for HF, gift provisions are not applicable, no IFRS income. And for you also, section 47 applicable because you are not taking any consideration. Gift is exempt for you. And moreover, the income which you are earning will now be shifted in the hands of HF. HF will also get 2,50,000 basically. Up to 2,50,000 you will be able to, save full 30% tax, no? Over and above that, whatever income the HF will earn, on that HF is not going to pay 30%. For the first 2,50,000 HF will pay only 5%. So you will save 25%. On the next 5 lakhs, HF will pay 20%. Still, you are saving 10%. Over and above 10 lakh, whatever income will be there from the asset, on that HF will also pay 30%. You were also supposed to pay 20% only. But till 10 lakh rupees of income, you have got a cushion, no? Of saving the taxes. Got it, sir? So if this happens, then things are bad. Now wait, one more thing I'll tell you. Now this asset HF is acquiring. Whatever income of this asset will be clubbed in the hands of member. Now when this asset will be transferred by the HF in the future, will there be any capital gains in the hands of HUF? Yes. Who will calculate the capital gain? HUF. Full value of consideration minus transfer expense, net consideration, yes or no? What will be the cost of acquisition? Since the transfer was exempt in the hands of Mr. A, the gain for the period of holding of A was not taxed in his hands. So now that gain should be taxed in the hands of HUF, and also the gain arising in the period of holding of A should be taxable. Do you remember? This was a mode specified under section 49(1). If the HF is getting the asset without consideration from the member, this was a mode specified under section 49(1). What will be the cost in the hands of HF? Cost to previous owner. Whatever cost will be there in the hands of member will be deemed to be the cost in the hands of HUF. Cost of improvement incurred by the member will also be deemed to be the cost in the hands of HUF. Period of holding of the member will also be included in the period of holding of HUF. But wait, last point, indexation only for the period of holding of HUF. If Manjula Bench judgment is followed, then indexation benefit starting from member's period of holding, starting from the year in which member held the asset for the first time. All the things we know only, no? Will you remember this? But wait, whatever capital gain will now be calculated in the hands of HUF, no? Is the income from that asset which was transferred by member, will be clubbed in the hands of member only. Although the capital gain will be calculated in the hands of HUF by taking 49(1) and all as a cost, yes or no? But the entire capital gain is the income of that asset only, no? Which was transferred by member. So any income from that asset, even if it is of the nature of capital gain, will be liable for clubbing in the hands of Mr. A. Entire income. Will you remember this? Now what is happening, this HF is undergoing a partition. Can the partition take place? Now the asset which was transferred by the member, no? See, the member transferred this asset. Till the time the partition is not taking place, entire income of that asset will be clubbed in the hands of member. Entire income, I said, entire income. Now if the HF is getting partitioned, so can I say this asset is made the subject matter of partition? Meaning that this asset will also be partitioned among the members. So if the same asset is also made the subject matter of partition, now out of that, share of such asset received by spouse of Mr. A, from that share whatever income which will be earned by the spouse, now only that income will be clubbed under section 64 to Mr. A. Only that income, that's it. On partition, whatever share of this asset coming to your spouse, from that share, whatever income your spouse will earn, only that income will now be clubbed in your hands, not the entire income of the asset, because that is illogical, no? Now, whatever part of this asset is going to other members, from that part, from that share, what other members are earning should not be clubbed in my hands. That is their income. Tax in their hands. Hello? Whatever asset which is coming to my spouse, the part of that asset which is coming to my spouse, from that part, whatever my spouse is earning, no, that is my income. Club that in my hands, not the entire income. Do you know? Some part of this asset will also go to Mr. A's minor son, minor child. Even that income will not be clubbed as per 64.2. Why? Because that is minor's income already clubbed as per 64.1a. And on that also, if 64.2 is applied, one income will be clubbed twice. Whatever income the spouse will earn from the part which was given to spouse, that income only will be liable for clubbing. Will you remember this? This was the end of 64.2. Now, two or three small points are remaining. Those points I will discuss. Pay attention. This is Mr. A. Why I am doing this, you'll understand. 1 minute only. Give me only 1 minute. Huh? You'll understand. Now pay attention. Now by now you would have understood what I want to do now. Tan, tan, na, 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 na. Mr. B transferring asset to Mrs. A. In return, Mr. A transferring the asset to Mrs. B. Now, whatever asset which will be transferred by A to Mrs. B, from that Mrs. B will earn income. Tell me, will that income be clubbed in the hands of Mr. A? The answer is no. Because Mr. A has not transferred the asset to his spouse. Hello? So the income of this asset cannot be clubbed in the hands of Mr. A because I have not transferred the asset to my spouse. So can this income be clubbed in the hands of Mr. B? Mr. B will say, no, that income is not from the asset which I have transferred to my spouse. How can you club that income in my hands? Same logic for this income also, no? Tell me, will this income be clubbed in the hands of Mr. B? No. Will it be clubbed in the hands of Mr. A? No. Don't you think both Mr. A and B knows each other and they can do such type of transfers and avoid the clubbing provisions? In such cases, if the clubbing provisions are avoided, just imagine for every such case. Now, can there be any clubbing provision separately? No, no. It is very difficult to identify all such cases and give clubbing provision for each and every separate case. This was a case which happened. Supreme Court judgment. I'm sharing that judgment with you. The name of the case was Keshavji Murarji. Again a Guju guy. This was Keshavji, this was Murarji. Keshavji, Murarji, they transferred the asset to each other's wife in such a way, no, that in nobody's hands the clubbing was done. And see, one transfer is the consideration for another transfer. The transfers are connected with each other. Connected in such a way that one transfer is the consideration for the other transfer. You are doing this transfer, against that I am doing this transfer. I am doing this transfer, against that you do this transfer. So both the transfers are connected to each other in such a way that both the transfers are a part of single transaction only. Both the transfers are part of the single transactions only and connected with each other, that each transfer is the consideration for another transfer. Yes or no? And it is designed in such a way to avoid the clubbing provisions. So even if specific clubbing provisions are not made to cover such type of transfer, still the clubbing will be done. Supreme Court judgment. So the income earned by Mrs. A will be clubbed in the hands of Mr. A, and the income earned by Mrs. B will be clubbed in the hands of Mr. B. Hello, sir. Will you remember? Wait, please pay attention. Now, how much income will be clubbed, that we have to see. See, Mr. A and B both wanted to transfer the income of 45,000. Okay. So to transfer this 45,000, Mr. A gave one FD of rupees 5 lakhs having interest at the rate of 9% per annum. So Mr. A gave FD having 9% rate of interest to Mrs. B so that she earns 45,000. And to give that same 45,000 benefit to Mrs. A, Mr. B transferred debentures of rupees 6 lakhs having interest of 45,000. So you transfer the FD of 5 lakh having 9% interest. My wife will earn 45. And in return, your wife should also get 45,000. No. For that, I will transfer 6 lakh rupees of debenture. Hello. That 6 lakh worth of debenture is having 45,000 interest income. So you transfer your 45,000 income to my wife. I transfer my 45,000 of income to your wife. For that, you transfer your bank FD. I transfer my debentures. Got it, sir? But here, if you will, in the hands of Mr. B, how much income will be clubbed? This entire 45,000 will be clubbed. Yes or no? In the hands of Mr. B, entire 45,000 will be clubbed. But if you want to club entire 45,000 in the hands of Mr. A, that cannot be done. Why? Tell me. See, this 45,000 no is the income on 5 lakh rupees of FD. But that 45,000 is not the income of 5 lakh rupees of asset. That is an income on 6 lakh rupees of asset. What if Mr. B also would have transferred 5 lakh rupees of debentures to Mrs. A? That time whatever income Mrs. A would have got, that is only liable for clubbing. You are supposed to find out the common amount of asset transferred. So if 5 lakh worth of FD is given, what should have been the income of 5 lakhs debentures to Mrs. A? That only will be liable for clubbing. Yes or no? This 45,000 is not the interest income from 5 lakh rupees of debenture. This is the interest income of 6 lakh rupees of debenture. Hello? What is the common amount of asset? 6 lakh or 5 lakh? 5 lakh. So on that common amount of asset, calculate the income. That is only liable for clubbing. Hello, sir? So now from here to here, what will be clubbed? Come on, tell me. Here to here, what will be clubbed? Entire 45,000 will not be clubbed. 45,000 into 5 upon 6. That 45,000 is the income on 6 lakh of asset. How much income on 5 lakh rupees of asset she would have earned? That is, tell me how much? 45,000 divided by 6 into 5. 37,500. Only this 37,500 will be clubbed in the hands of Mr. A. So now, sir, 37,500 will be clubbed in the hands of Mr. A. How much will remain? 7,500. That 7,500 will be taxable. That 7,500 will be taxable in the hands of Mrs. A only. Will you remember this? This is known as indirect transfers. This is known as cross transfers. So in the case of cross transfer, no need to club the entire income happening. First of all, calculate the income from the common transfer of asset. Only that income will be clubbed. But even if there are no specific provisions for clubbing, still the clubbing will happen in such cases. Supreme Court judgment is there. Keshavji, Morarji. Yes or no? Because of that judgment, even if there is no specific provision to cover such transfers, clubbing transfers, yes or no? Still there will be clubbing because all these transfers are connected with each other as a consideration for each transfer and are a part of a single transaction to avoid the clubbing provisions. So in these cases, even if there is no separate clubbing provision, still the clubbing will take place. But clubbing of only that income which is out of the common amount of asset. And common amount of asset is 5 lakhs. Got it, sir? Remaining 7,500 will be taxable in the hands of Mrs. A. 37,500 will be clubbed in the hands of Mr. A. Will you remember this? Should I move ahead? Perfect. Now pay attention. Do you remember one thing? That business was there. In this business, the net profit was there. So the net profit attributable to capital which was invested out of gifted cash by husband. Example, we took the example of husband, no? So whatever cash gifted by the husband invested in the business as a capital, to that capital, whatever net profit is attributable to that capital, whatever net profit attributable to that capital, that net profit was clubbed in the hands of husband. And if wife gives that to husband, if this transaction happens reverse, what if husband is doing a business and wife is gifting? So the amount gifted by the wife was invested by the husband in his business. So whatever net profit now the husband will earn, the net profit attributable to the cash gifted by the wife, hello, invested in the business as a capital, that net profit will now be clubbed in the hands of wife also. Yes or no? But for that net profit, first will be the income of this business. Net profit will be first computed in the hands of, in our case, in the hands of wife. Whose business was there? Wife's. So calculate the net profit in the hands of wife. First the income will be computed. And now that income is positive, net profit. Now out of that, proportionate profit is clubbed. What if there is a loss over here? What if instead of net profit, there is a net loss over there? So my question is, the proportionate part of profit was getting clubbed in the hands of husband. Will the proportionate amount of loss be clubbed? Absolutely yes. There cannot be double standards. If the profits are coming, proportionate profits you are charging in my hands, clubbing in my hands, I have to pay tax on that. So why not the proportionate losses I should claim as set off? So whenever the income will be calculated, first the income will be computed in the hands of the transferee. Hello? First the income will be computed in the hands of transferee. Once the income is computed, if that income is positive, that will be clubbed. But what if the computed income is negative after taking deductions and everything? Whatever income is negative, even that negative income is liable for clubbing. So if the clubbing provisions are applicable, they are not applicable only on the positive incomes, they are applicable on the negative incomes also. Getting my point? Do you remember there was a firm in which I am having a substantial interest? From that firm, my wife is getting remuneration. That remuneration is clubbed. First, that remuneration my wife is getting will be taxable for her under the head salary. Her salary income will be computed by taking every deductions and everything. Then only the final income will be clubbed. That final income will be positive, then also it will be clubbed. That final income, if it is negative, then also it will be clubbed. So the clubbing provisions will be applicable only after computing the income in the hands of transferee. First the income will be computed in the hands of transferee, then that income will be liable for clubbing. Getting my point? Now do you have a house property? Wait. Do you have a house? My wife is having a house property. That house property I did not transfer. I am not the deemed owner. Even if I have transferred, first the income will be computed in her hands. Whatever income from that house property is computed in her hands will be taxable for me because I am the deemed owner. But what if I have gifted the cash and out of that cash she has bought the house property? First the income of that house property will be computed in her hands. And from that income, which is computed in her hands, that income will be clubbed in my hands. Always the income will be computed first in the hands of transferee, and then resulting computed income will only be liable for clubbing. And if that is positive, clubbed in my hands, I will pay tax. And if that is negative also, then also it will be clubbed in my hands. The clubbing provisions applies not for positive income only, it applies for negative incomes also. Done, sir? Sure, sir. See, clubbing of negative incomes. Cross transfers already I have explained. Okay, no? Now pay attention. See, the cross transfers which I told you, no, here. See, there can be a change here. Mr. A transferring assets to Mrs. B. Mr. A transferring asset to Mrs. B. Mr. B transferring asset to A's minor son. Then also it is a cross transfer. Huh? Then also the same provisions will be applicable. Now minor son's income will be clubbed in the hands of Mr. A. So cross transfer, it is not necessary that husband to wife, always the transfer will take place. Okay. Husband to other's wife and one person to others, minor child also the transfer can take place. So still these provisions are equally applicable in those cases also. Yes or no? Now tell me one thing. If Mr. A is there, okay, Mr. A is there, he has transferred one asset to Mrs. A. From that asset, Mrs. A is earning the income. Okay. Now, is it this asset was transferred without consideration, without an agreement to live apart? Okay. So, whatever income wife is earning, is it her income or Mr. A's income? So, the assessing officer went and he said, Mrs. A, madam, this income which you are earning, no, this income which you are earning, this is not your income. Although it is computed in your hands, compute, okay? But not taxable in your total income. We will club it in the hands of your husband. Okay, bye madam. This income is clubbed in the hands of husband. Now the income is in the total income of the husband. Now the assessing officer is saying, Mr. Husband, Mr. A, pay tax on your income and also pay tax on this income, because this income will now be included in your total income. Hello? Mr. A is saying, money illa. Money illa. I am insolvent. Possible? What if Mr. A becomes insolvent? Will he be able to pay tax on his income? No. So definitely he is not able to pay tax on this income also which is clubbed. Or what if the moment this income was clubbed, Mr. A got a heart attack and he died? Forget about his income. He'll not be able to pay tax on this income also, no? Now my question is, don't talk about his income. At least on this clubbed income, the tax can be recovered from the transferee. We are not asking for tax on his other incomes, but at least on this clubbed income, madam, you pay tax. So what madam will say? Earlier you were, doing natak. Earlier you were saying, no madam, not your income, your husband income. You only took this income to my husband's total income. Now if my husband is not able to pay, now you cannot ask the tax from me. My wife will say that only, no? So she cannot say that, because section 65 gives the power to the assessing officer to demand the tax on the clubbed income which I was supposed to pay from the wife, from the transferee. If by any chance the tax on the clubbed income could not be recovered from the transferor, that tax the assessing officer or the department can demand that tax from the transferee also. Section 65 gives that right. That's it. Now what can you see over here? Can you see something over here? This is EON, end of notes, meaning all the discussion of this chapter is over. Theory is done. Okay, now what we are going to do? I have given these notes, no? Krishna? We are going to solve the questions now. Very difficult questions, huh? You'll see, very difficult question. Don't tell me later that, sir, you did not tell us. The questions are so difficult, sir. Let's see how difficult the questions are. See, what is the name of the chapter, friends? Incomes of other persons included in the assessee's total income. We call it clubbing. Yo. Okay. So, the first question coming your way. Very difficult question. Okay. I will not touch this question because a similar type of example I have already given while discussing section 60. If you still want, I will discuss. Mr. Watson has transferred through a duly registered document the income arising from go down to his son without transferring the go down. So without transferring the asset, if you are transferring the income of that asset to any person, as per section 6060, that income will be clubbed in your hands. So, in whose hands the income will be taxed? In whose hands the rent will be taxed? It will be taxed in the hands of Mr. Watson by applying the provisions of section 60. Because this is a classic case of transferring the income without transferring the asset generating such income. Yes or no? Next one. Question number 2. Come to question number 2. Now pay attention, very difficult question. I told you, no? Mr. A holds shares carrying 25% voting powers in X Private Limited. Can I say X Private Limited is a concern where Mr. X is having substantial interest? 20% or more shareholding? Yes or no? Now, Mrs. A is working as a computer software programmer in X Private Limited at a salary of rupees 30,000 per month. She is, however, not qualified for the job. Wow. So why she is earning that salary? Because I would have applied my influence over the company. I would have told the company that instead of paying me 3,60,000 as salary, instead of paying me 3,60,000 as my income, appoint my wife as a computer software engineer or computer software programmer and pay her that 3,60,000 in the form of what? Salary. I would have done that influence. Because without any professional or technical qualification, skill, experience, if she is earning that salary should not be taxable for her. That salary should be clubbed in my hands. Which section do you remember? 64 subsection 1 clause 2. So first you have to write that provision, and as per that provision this treatment is given. Will you be able to do it? Now wait. They are not telling you whether it will be taxable or not. What they are asking you? Compute the gross total income of Mr. A and Mrs. A if they are paying tax under default tax regime, meaning that 115 BAC is followed, and they are saying the other incomes of Mr. A and Mrs. A are 7 lakh and 4 lakh. Now what you will do? You will write Mr. A over here and you will write Mrs. A over here. Okay, no? Wait. What is the other incomes of Mr. A? 7 lakhs. What is the other income of Mrs. A? 4 lakh. And apart from this, Mrs. A is earning salary of 30,000 per month. Tell me yes or no. If she is earning the salary of 30,000 per month, 30,000 into 12. She'll be earning 3,60,000 as her salary. Yes, sir. Is she following 115 BAC? Is she following 115 BSA? So from her salary she'll get a standard deduction. How much? 75,000. So can I say 3,60,000 minus 75,000 will be 2,85,000? This 2,85,000 will not be taxable for her, shall be brought in the total income of Mr. A. So now her total income will only include 4 lakh. So her GTI will be 4 lakhs only, because 2,85,000 taken away from her total income and included in the total income of Mr. A. And how much will be the total income of Mr. A? 2,85,000 will be brought here. So his total income will be 9,85,000. Did you understand this? Please check the final answer. 9,85,000 for Mr. A, and for Mrs. A it is 4 lakhs. Done? Will your answer be different if Mrs. A was qualified for the job? Absolutely yes. My answer would have been different. Then this switch I have made, no, I would not have made that switch. 2,85,000 would have remained in the total income of Mrs. A. So her total income would have been 6,85,000. Hello sir. And in Mr. A's total income, now 2,85,000 will not go. His total income will remain 7 lakhs only. Yes or no? So that is the answer. See, Mr. A 7 lakhs and Mrs. A it will become 6,85,000. Done sir? Everyone done sir? Okay. Now coming to illustration number. I told you, no, all the questions are very difficult questions. In the beginning only I have told you all the questions are very difficult questions. Okay. Illustration number 4. Mr. B holds shares carrying 30% voting power in Y Private Limited. So in Y Private Limited, he is having a substantial interest. Mrs. B is working as an accountant in Y Private Limited, getting income under the head salary. See, salary they are saying computed. Now please, requesting you, don't take 75,000, 50,000 standard deduction and all. They have only computed that salary. That computed amount you are supposed to include, meaning club or not to club. Yes or no? Now tell me, 3,44,000 without any qualification in accountancy. Can I say this 64 subsection 1 clause 2 will be applicable over here, and this 3,44,000 will be included in the total income of Mr. B? Okay, that 3,44,000 is already computed. No need to compute it separately. Okay, no? Next one. Mr. B also received 30,000 as interest on securities. Mrs. B owns a house property which she has let out. Rent received from the tenant is 6,000 per month. Compute the GTI of Mr. B and Mrs. B. Very difficult. See, first I will talk about Mr. B. So for Mr. B, can I say he is earning 30,000 as interest income? Yes. And apart from that, 3,44,000 will also be treated as his income under 64 subsection 1 clause 2, because this is his wife's income from a concern where he is having a substantial interest, and this income his wife is earning without any professional or technical qualification. So this will be his income taxable for him. So what will be the total? 3,74,000 will be the GTI of Mr. B. Now Mrs. B, she is working somewhere. So sorry. She is having a house property which was let out. So 6,000 was the monthly rent which she is earning. Nothing is mentioned, meaning 12 months rent. 72,000 will be her rent which she is earning. This actual rent will only become her GAV. There is no municipal tax. NAV will be 72 minus 30% standard deduction she is going to take. So 72,000 into 30%, 21,600. So 50,400 will be her GTI. So how much is the GTI taxable for wife? 50,400. How much is the GTI taxable for the husband? 3,74,000. Everyone, did you understand? Please check the answer, sir. 3,74,000 for the husband and 50,400 for the wife. Can you see the salary over here? For wife it is nil. Where the salary has gone? She is earning 344. Still it is gone. It is included in the total income of the husband. Clubbing done as per 64 subsection 1 clause 2. This clubbing was done. Understanding? Yes sir. This was your question number 4. Now coming to question number 5. Vaibhav started a proprietary business on 1st of April 2023 with a capital of 5 lakh. Vaibhav started, Vaibhav, husband started. In my example, I took wife. Here the husband is starting. 5 lakh capital. It was his own capital. and he incurred a loss of rupees 2 lakh. Ayyo. So last year his closing capital will be 5 lakh plus 2 lakh or 5 lakh minus 2 lakhs? Minus 2 lakh. So it will be 3 lakh rupees of closing capital last year. So that 3 lakh will become opening in this year, everyone. Now, to recover such loss and to do the business efficiently next year, Vaibhav's wife is giving him 5 lakh rupees of gift on the first day of April 24, very first day of the previous year. He is getting that gift of cash. And see, without doing a single day delay, on the same day he is investing that 5 lakh in the business. So can I say, now the opening capital in the business in the previous year 24-25, the opening capital in the business was 5 lakh minus 2 lakhs loss of the last year. This was the opening capital. Yes or no? 3 lakhs. In this was on the 1st April, no? On the same day, capital introduced. What capital introduced? Cash gift from the wife amounting to rupees 5 lakhs. So can I say total 8 lakh rupees capital is there as on the first day in my business? Hello? By investing this 8 lakh for the full year in my business, I will earn a profit of how much? 4 lakh during the year. So now for this year, how much profit Mr. Vaibhav has earned? 4 lakh rupees of profit. So can I say that 4 lakh Vaibhav has earned because of that 8 lakh invested in the beginning? Yes or no? Now out of this 4 lakh, some profit relates to that 5 lakh also gifted by wife. So how much is that? Can you please do the favor? It is 2,50,000. Everyone. So 4 lakh is on 8 lakh. How much should be on 5 lakh? So 4 lakh into 5 upon 8. Yes or no? So that comes to 2,50,000. So 4 lakh is the profit on 8 lakh. So how much will be on 5 lakh? It will be 2,50,000. So can I say this 2,50,000 is on that capital which wife gifted to Vaibhav and Vaibhav invested in the business? So for that capital, this is the profit. So this profit should not be for Vaibhav. This profit should be for his wife. Taxable in the hands of wife. Clubbing. The clubbing will happen 2,50,000 and this will be clubbed in the hands of wife Vaishali. Huh? His wife's name is Vaishali only, no? Yes, Vaishali. So this will be taxable in the hands of Vaishali. So how much business profit will now be taxable in the hands of Vaibhav? 4 lakh minus 2,50,000. 1,50,000 will be taxable in the hands of Vaibhav. Done, sir? Difficult? Very difficult? Perfect. Question number. Now see, read this note below that question. Read this note. The gift provisions will not be applicable because husband is getting the gift from the wife, from the relative. So 5 lakh will not be taxable in the hands of husband in terms of gift. Okay. Now, illustration number 6. Mrs. Kasturi transferred her immobile property to ABC company. Oh, ABC company is formed and on the name of that company, immobile property is transferred. Mrs. Kasturi does not want to transfer this property to her son's wife. If she does that, clubbing provisions will apply. So she is transferring that property on the name of a company and instructing the company that out of the rental income of the immobile property, 36,000 per annum shall be used for the benefit of son's wife. So whatever income that company will earn, out of that income, how much income will be used for the benefit of son's wife? 36. Can I say this 36,000 will be clubbed in the hands of Kasturi under section 36 subsection 1 clause 8. As per clause 8, this will be clubbed in the hands of Kasturi. Yes or no? Now see, read the question properly. Mrs. Kasturi claims that the amount of 36,000 utilized by her son's wife should not be included in her total income. Amma, we just told no that this will be included. Why you are saying it should not be included? Is your contention correct, Amma? No. You cannot say that this income will not be clubbed for you, because as per the provisions of 36 subsection 1, sorry, 36, I'm writing 36. Ayyo, I've gone mad. 64 subsection 1 clause 8. As per the provisions of 64 subsection 1 clause 8, this income which is utilized for the benefit of your son's wife out of the asset which you have transferred to ABC is eligible for clubbing under clause 8. You cannot say that it cannot be clubbed. So your contention is valid in law or not valid in law? Not valid in law. Your contention that not taxable in your total income is not valid. It will be taxable in your total income by applying the provisions of 64(1)(8). Yes or no, sir? This is also done. Next one. Are you finding the questions difficult now? Okay. Illustration number 7. Mr. A has 3 minor children, 2 twin daughters aged 12 years and 1 son 16 years. Income of the twin daughters 2,000 per annum each, and that of her son is 1,200 per annum. Mrs. A has transferred her flat to her minor son on 1st April 2024 out of natural love and affection, meaning Mrs. A has transferred the asset to his minor son. For that, Mrs. A is a deemed owner, because out of love and affection she has transferred. Love and affection is not a consideration. So without adequate consideration, the asset is transferred. What asset is transferred? House property. For that, the transferor person becomes the deemed owner. So the income of that house property owned by the minor son will now be taxable in the hands of Mrs. A. Okay, no? Next one. The flat was let out on the same date and the rental income from the flat is 10,000 per month. Okay. So rental income is 10,000. Okay. Compute the income in respect of minor children to be included in the hands of Mr. A and Mrs. A under section 64(1)(a), assuming that Mr. A's total income is higher than Mrs. A's total. See how you know how good this examiner is. I love these kind of people. Why? Because he is not putting me in trouble to calculate the total income of both the parents. He has only told me that out of the total income of both the parents, Mr. A's total income is higher. So now, whatever incomes of the minor children are there will always be included in the total income of Mr. A only. But wait, not the income of that flat, which was transferred by Mrs. A. On that, clubbing provisions are not applicable. On that, section 27 is applicable. Yes or no? Now pay attention. And both Mr. A and Mrs. A exercise the option of shifting out of the default tax regime. Simple question. See, 2 minor daughters earning how much? 2,000 each, no? So 2,000 of first minor daughter, 2,000 of second minor daughter. Out of that 1,500 exempt. Out of that 1,500 exempt. Why you are taking 1,500 exempt? Because both are not following 115 BSE. Yes. If both would have followed 115 BSE, then this 1,500 exemption would not have been given. Entire 2,000 would have been taxed. Yes or no? So 500 income for first daughter, 500 income for second daughter. Both the incomes will be clubbed under section 64(1)(a) in the hands of Mr. A. Will you remember this? Now, minor son earning how much? 1,200. Okay, out of that 1,200 will be exempt. How much will be taxable? Nil. So this nil will be clubbed in the total income of Mr. A. First 1,200 will be included, minus 1,200. 1,200 means why I am reducing 1,200? For minor son also, I am going to get 1,500 exemption, but for that my income should be, my minor son's income should be 1,500. No, if it is below 1,500, entire income is exempt. Nothing will be clubbed. Yes or no? Now, 10,000 rupees is the rent for the property which was let out. And it was let out for the full year. without any vacancy. Yes or no? So into 12 will be 1,20,000. This is the actual rent. This will only become the GAV. Okay. And out of this, municipal tax is not there. I will reduce minus 30%. So 1,20,000 minus 30% will be 84,000. Now friends, this 84,000 no is the income from house property which will be taxable under section 27. Mrs. A will be treated as the deemed owner of the property. So this entire 84,000 will be taxable in the hands of Mrs. A. Now how much income will be taxable in the hands of Mr. A? 500, 500, 1,000 for daughters. For son there will be nil. So how much will be the taxable income for Mr. A? 1,000 only. And for Mrs. B it will be 84,000 taxable in the hands of Mrs. B by applying 27(1). Can you see? For Mrs. A, section 27 applicable, and as per section 27 she is the deemed owner of the property which she has transferred without consideration to his son. Hello? And for that property, what is the income computed? 84,000. That computed income will be taxable in her hands by treating her as deemed owner. This is given in note number. This is given in this note. Okay? Now, coming to illustration number 8. Now this question, easy question, very easy question, we'll discuss. Eight. Compute the gross total income of Mr. A and Mrs. A. They are telling you to compute both. For both. Gross total income you are supposed to compute for both. Okay, no? So, from the following information, what information is given? Assuming both exercise the option of shifting out. Meaning, if minor's income is to be clubbed, 1032 exemption will be available. 1,500 rupees. Everyone? Yes or no? Now tell me. Salary income of Mrs. A will be taxable for Mrs. A. Professional income of Mr. A will be taxable for Mr. A. Now, check the income for both the parents. Whose income is higher? Mr. A. So, whenever the clubbing of the minor child will happen, it will happen in the hands of Mr. A only. Because his income is higher as compared to Mrs. A. Yes or no? Now, income of minor son B from company deposit. Is it his income from special talent, etc.? No. So, will this income be clubbed? Yes. 64(1)(a) clubbing will be done. Okay. Now, income of minor daughter C from special talent. Oh my God, this is income from our special talent. Will there be any clubbing? No. 64(1)(a) clubbing will not happen. This is her income only, taxable for her. Okay. Will not be taxable in the hands of any of the parents. Now, this income of the special talent was invested somewhere, and out of that investment some new income is coming. Is it her special talent income? No, this is her any other income. So this income will definitely be clubbed. 64(1)(a). Now minor daughter C is receiving a gift from friend of Mrs. A. So your mother's friend is not your relative. So gift is coming from a non-relative, but the amount of gift is not more than 50,000. It is less than or equal to 50,000. Hence it is not taxable. If it was more than 50,000, then the gift would have been taxed, and then it would have been clubbed also. But since the income itself is not taxable, what to club? Nothing to club. Yes or no? And if it would have been clubbed, it would have been clubbed in the hands of Mr. A only, huh? Yes. Now tell me, out of this 15,000 which is to be clubbed, 1,500 exemption will be available, and this will become 13,500. And out of this 3,000 minor daughter C's income, from this also 1,500 exemption will be available and 1,500 will be taxable. So now for Mr. A, if we see, if we talk about Mr. A, tell me, Mr. A is having a professional income of 3,90,000. Yes, sir. Minor son B's income is getting taxed. After exemption, how much income? 13,500. and minor daughter C's income also clubbed in his hands. Yes or no? That is 1,500. Any other income taxable in his hands? No. So it will be 4,05,000. This is the GTI of Mr. A. Now tell me, what is about Mrs. A? Her only income is 2,30,000. No clubbing, no other income. So this will be her GTI, and this is the GTI of Mr. A. Very difficult, no? These type of questions they can ask in the exam. Okay, mark this question important. Important, not that much important, but okay, these type of questions they can ask. 4 to 6 marks max. Sir, see, 4,05,000, and for wife it was no income. Ninth one, come on, let's start ninth one. Mr. Vasudevan gifted a sum of rupees 6 lakh to his brother's wife. Ayyo, cross transfer, sir. Why would Mr. Vasudevan transfer his asset to his brother's wife? Asset worth 6 lakhs transferred to brother's wife by Vasudevan on 14th of June 2024. On 12th July 2024, in return for that, his brother gifted sum of 5 lakhs to Mr. Vasudevan's wife. Wow. The gifted amounts were invested as fixed deposits in banks by Mrs. Vasudevan and wife of Mr. Vasudevan's brother on 1st August 2024 at 9% interest. Do you remember? Mr. A, Mrs. A, Mr. B, Mrs. B. Now, Mr. Vasudevan, Mrs. Vasudevan, Vasudevan's brother, Vasudevan's brother's wife. Hello. How much asset transferred? 6 lakh. And here 5 lakhs. On 6 lakh, how much interest? This much interest. On 5 lakhs, how much interest? This much interest. Hello. So common amount is 5 lakh only, no? So on that 5 lakhs, how much interest? That we have to calculate. Okay, no? So pay attention. What I'll do? Mr. V. I am writing Mr. V. Will you understand? Mr. V. Vasudevan. Bro. This is Mrs. V. This is bro's wife. How much Mr. V gave? 6 lakhs, no? And how much bro gave? Bro gave 5 lakhs only, no? And both invested in 9% FD. On what date? One amount was given in June, one amount was given in July, but both the amounts were invested in FD in 1st August. So FD interest will come from 1st August only, no? So into 9% into 8 by 12 into 9% into 8 by 12. So can I say 5 lakhs into 9% into 8 by 12 will give me 30,000 over here, and here it will be 36,000. Now wait. This 30,000 is the income on 5 lakhs and this 36,000 is the income on 6 lakh. So what I will have to do, this for Mr. V, what did I say? For Mr. V, 30,000 will be clubbed. Yes or no? But for bro, can you club 36? Or for bro also you'll have to convert the amount, equivalent amount. Yes or no? So on 5 lakh, for 6 lakh, this is there. So for this 6 lakh, if it is 36, then on this, from out of this, if 6 lakh was not given, only 5 lakh was given, then how much? 30,000. Getting my point? How did you calculate this 30,000, sir? See, 36,000 divided by 6 into 5. this will be clubbed. Will you remember, sir? Please check the answer. To the extent of amount of cross transfer 5 lakhs, interest income earned by spouse 5 lakhs would be clubbed in the hands of Vasudevan brother and not the interest income on the entire fixed deposit of 6 lakhs, since the cross transfer is only to the extent of 5 lakhs. This is important part. If you will read it, read the entire question, you will get the same explanation which I have given you right now. But this is the important part of the entire question. Okay. Next one. Ayo, all the illustrations over. Now only the practice questions are remaining. How many practice questions are there? 1, 2, 3, 4, 5, 6, 7. 5. 5 there, no? Okay. Easy questions. We'll finish them. Okay. We'll finish them. Okay. First one, test your knowledge. In test your knowledge, no? Question number 1. A similar type of question we have done earlier. Mr. Sharma has 4 minor children. 2 daughters and 2 sons. Annual income of 2 daughters were 9,000 and 4,500 and sons were 6,200 and 4,300 respectively. The daughters who has income of 4,500 was suffering from disability specified under 80. Please pay attention. This 4,500, no clubbing will be done, because this 4,500 is earned by a minor daughter who is a handicap. So for this there will be no clubbing. But for this 9,000 there will be clubbing, no? For this 9,000 there will be clubbing. So 64 subsection 1A will be applicable here. And see, out of this 9,000, 1,500 exemption will be given. So 9,000 minus 1,500, how much? Tell me. 9,000 minus 1,500 will be 7,500. So that 7,500 will be taxable for first minor daughters. Okay, sorry, taxable income of first minor daughter included, clubbed in the hands of Mr. Sharma. Okay, now 2 sons are there. One is having 6,200 and another is having 4,300. This also, both will also be clubbed under section 64 1A. Hello sir. Both will be clubbed in the hands of Mr. A under section 64 1A. So how much? Come on, tell me. From here 1,500 exempt, from here 1,500 exempt. So 6,200 minus 1,500 will be 4,700. Okay, and here 4,300 minus 1,500 will be 2,800. And see, this is done only if 115 BSE is not followed. Yes, if the question says that assessee is following 115 BSE, then if you are giving 1,500 exemption, you are gone. Entire income you are supposed to club without any exemption. Yes or no? Next one. Compute the amount of income earned by minor children to be clubbed in the hands of Mr. Sharma, assuming exercise the option of shifting out. He has exercised the option and we have calculated the incomes also. Done, sir? Okay. Next one. Now see, during the previous year 24-25, the following transactions occurred in respect of Mr. A. Mr. A had a fixed deposit of 5 lakh rupees in Bank of India. He instructed the bank to credit the interest on the deposit at 9% per annum from 1st April 24 to 31st March 25 to the saving bank account of Mr. B, son of his brother, to help him in his education. He is just transferring the interest for this entire year to his brother's son's savings account, saying that I want to help him for his studies. Okay, no problem. Help him for his studies. So give him the FD also, no? Without giving the FD, if you are transferring the income of the FD, that is transfer of income without transferring the asset. That will be Section 60, entire interest income will be clubbed in your hands only, Mr. A. So for Mr. A, the entire income will be clubbed. How much? 45,000. 5 lakh into 9% for the full year. Okay. Next one, if you will see, Mr. A holds 75% profit share in a partnership firm, meaning he has a substantial interest. Mrs. A received a commission of 25,000 from the firm for promoting the sales of the firm. Mrs. A possesses no professional or technical qualification. 64 subsection 1 clause 2. Even this will be clubbed in the hands of Mr. A. Okay. So for Mr. A, 25,000 will be clubbed. Next one. Mr. A gifted a flat to Mrs. A. So if you are gifting a house property to your spouse without adequate consideration, without an agreement to live apart, whatever income of that house property which is calculated, for that you are the deemed owner as per section 27, and that will also be taxable in your hands, Mr. A. Okay. Now one son is there, minor son is there, who Mr. A has gifted 2 lakh to his minor son, who invested the same in a business and derived business income of 20,000 from the investment. Can I say this is minor's special talent income? He just invested that amount in a, meaning that you wanted to invest on your name in a business, but instead of investing on your name in the business, you invested on the name of your minor son. This is your income only. You are investing on the name of your minor son, liable for clubbing, 64(1)(a). But under whose total income it will be clubbed? Mr. A or Mrs. A, whose total income will be higher. But for that we'll have to first find out the total income of both the parents. Hello sir. Understanding, no? But clubbing will definitely happen. 64(1)(a), definitely clubbing. Okay. Now, minor sons deriving income 20,000 through a business involving application of his skill and talent. So from this business, whatever income he is earning will not be liable for clubbing. There will be no clubbing, because this entire business income he is earning from his skills, his talent only. So no clubbing for this income. So tell me, if 3 columns are made, Mr. A, Mrs. A and minor son. So in minor son's column, no, this 20,000 will be shown taxable over there. Only this income will be taxable in the hands of minor son. Yes or no? Now, during the year, Mr. A got a monthly pension of 10,000. Oh, monthly pension of 10,000 meaning salary income of 10,000 per month. He had no other income. Meaning, can I say monthly pension of 10,000 for 12 months, it will be 1,20,000 pension which he will get. Where this pension will be taxable? This pension for him will be taxable under the head salary, no? And from there, he is going to get standard deduction also. Pension is a salary income. From salary head, he is going to get. First, he will have to compute the income, no? So, how much standard deduction? He is shifting out of the default tax regime. Please check. Last line. Both are shifting out. Mr. A, Mrs. A, both are shifting out of default tax regime. Yes or no? So, here you will take 50,000 standard deduction. So you are going to get 70,000 as income for Mr. A. This is the only income Mr. A is having? No. All the 3 incomes which are to be clubbed in the total income of Mr. A, please come and add that also. So in 70,000, will you add 25,000? Yes. Will you add 45,000? Yes. Will you add 52,000? Yes. Now please do the needful. Total you will get 1,92,000. This is the gross total income of Mr. A before giving effect to clubbing provisions of 64(1)(a. Before the clubbing of minor's income, Mr. A's income is this. If other clubbings are happening, do other clubbings also. But first calculate the total income of father and then now calculate the total income of mother. Mother is working part-time somewhere. See, earning 20,000 rupees per month from part-time job. Can I say 20,000 into 12 is equal to 2,40,000? And she is also going to get 50,000 standard deduction. So her income will only be 1,90,000. Getting my point, everyone? So 190 if she is earning and 192 Mr. A is earning. Hello sir. Whose total income is higher? Mr. A. So now that 20,000 minor son's income will be clubbed in the total income of Mr. A. So now Mr. A's income will not be 192. It will be 192 plus 192 plus 18,500. You can see the same calculations I have done here. Okay. So Mr. A, this is the income, 70,000 salary income. These three incomes clubbed 192. In that 18,500 minor sums income will be clubbed. So Mr. A's income will be 2,10,100. Yes or no? Now for Mrs. A, 20,000 into 12, 240 minus 50,000, 1,90,000. This is the only income which Mrs. A is having. Everyone, did you understand? Now pay attention, please, sir. In the same question, no? Same question. If I wanted, I would have done a little bit twist. Mr. A following 115 BSc and Mrs. A not following 115 BSc. Then Mr. A's income would not have been 192. It would have been different. 1,20,000 minus 75,000 standard deduction. So 45,000 only. Plus 25,000 plus 45,000 plus 52,000. 1,67,000 would have been his total income. And Mrs. A's income would have been 190. So now which parent's income is higher? Mrs. A. So now minor's income will not be clubbed in the hands of father. It will be clubbed in the hands of mother. Because her income is higher. Yes or no? If examiner would want, examiner can do such kind of tricks with you. Okay? Be very careful. Next one. Mr. A gifted house property valued 50 lakhs to his wife, Mrs. B. This is good question, huh? Very good question. What is happening? Please check. See, Mr. A gifting house property to wife. So, Mr. A to Mrs. A. House property transferred. Now, if Mrs. A earning income from that property, Mr. A is the deemed owner, income will be taxable in the hands of Mr. A. But what Mrs. A is doing? Mrs. A gifted the property to his son's wife, to her son's wife, Mr. C's wife. Can I say Mrs. C? Who happens to be son's wife? Now, out of that, 25,000 per month rent is coming. 25,000 into 12 will give you 3 lakhs. And out of that 30% standard deduction, 2,10,000. So what is the income of this house property? 2,10,000. Now my question is, this 2,10,000 will be taxable in the hands of Mrs. A or Mr. A? Mr. or Mrs. A? If it is taxable in the hands of Mrs. A, ultimately it will become Mrs. A's income from the property which was transferred by Mr. A to her, for which Mr. A is already the deemed owner. Hello? So ultimately the income will go in the hands of Mr. A only. Can I say Mr. A has transferred the property to his son's wife, not directly but indirectly through his wife? Hello, Mr. A has transferred his house property to his son's wife through his wife, Mrs. A. Direct transfer or indirect transfer? Indirect transfer. So, if any asset is transferred by an individual directly or indirectly without taking adequate consideration to his son's wife, from that whatever income son's wife is getting, that is liable to be clubbed in the hands of transferor only, no? So is the main transferor Mr. A. So here what will apply? 64(1)(6) will apply, and this will be clubbed in the hands of Mr. A. 6416 will apply. This will be clubbed in the hands of Mrs. A. And ultimately, for this property, Mr. A only is the deemed owner, no, as per 27. So ultimately, this income is going to go in the total income of Mr. A only. So directly apply 6416 and club this income in the hands of Mr. A. Now, please wait. Now the important transaction coming. Now Mr. A, instead of transferring the property to his wife, he has transferred the said property to his son, meaning the husband of Mrs. C. Now what is happening? Please pay attention. Mr. A transferred the asset to his son, Mr. C. Now for this, Mr. A is not a deemed owner. Because transferring property to your son, who is not a minor son, you are not the deemed owner. Okay? Forget about you. You are not a deemed owner. Now Mr. C, who is having the property now, is transferring this property to his wife, Mrs. C. So can you transfer your property to your wife? Yes. Without adequate consideration? Yes. Out of that, if you are earning any income, don't you think as per section 27, husband will only be treated as a deemed owner, so this income will be taxable in the hands of Mr. C by treating him deemed owner. Will not be brought in the hands of Mr. A, because Mr. A, the things are done. He is not the deemed owner anymore. Done? No, sir. So this was the transaction. These kind of one small adjustment they can give in the exam, involving the assessee in the question. What will you do? God knows. Question number 4. Proprietary business. This is the similar question to the one question which we have solved. Vaibhav and Vaishali question we have solved, no? Proportionate income. So see what you will do. 3 lakh rupees is the capital in the business as on 1st April 2023. Her husband gifted 2 lakh last year only, 10th April 23, which was invested in the business. So last year the total capital was 3 lakh plus capital invested 2 lakhs. Okay. And last year profit earned was 1 lakh 50. So can I say last year, previous year 23, 24, opening was 3 lakh, new capital invested 2 lakh, and this was out of the gift from husband. Yes or no? So this was total 5 lakhs. But last year profit also happened, no? Net profit, how much? 1 lakh 50. So total capital as at the end of the year was 6 lakh 50. Now this will become opening in this year. So this year 24-25. How much is the opening? 6 lakh 50. Don't you think that in this 6 lakh 50, 2 lakh given by the husband is also there? So this year's profit is 3 lakh 90. That is on 6 lakh 50. How much should be the profit on the 2 lakh, which is there in this 6 lakhs? So that will be 1 lakh 20 if I'm not wrong. Yes or no? How come you are getting 2 lakh 60? Kanu? 3 lakh 90 is there, no? How much is the capital given? 2 lakh. Calculate, no? It will be 1 lakh 20. No, why? What profit of husband you are going to add? No need to add. No. Don't apply extra mind. No need to apply. Last year husband gave on 10th April. So last year's entire profits belong to the wife only. Because last year 1,50,000 profit was on the opening capital only, no? Which belongs to wife only. Hello? Even if the capital was given by the husband on 10th of April, but you don't know that how much on that capital would have been earned in the next year, because the profits don't accrue evenly, no? Hence they are taking as on 1st April only check. So whatever capital invested in the last year, was it invested on the first day of the last year? No, it was invested on the 10th April. So as on the first day of April, how much was the capital in the business? 3 lakhs. On that 3 lakhs only this profit is there. Hello. And that 3 lakh belongs to wife only. So 1 lakh 50 belongs to the wife only. Hello. Now this year 6 lakh 50 is there opening. On that 650, 3 lakh 90 is earned. 3 lakh 90 is earned on the 650. Out of 650, as on the first day, husband's money is there in the business, no? How much? 2 lakhs. So on that 2 lakh, how much profit would have been earned? That only you are supposed to calculate. That's it. Amount on the capital only. That's it. Got it? So that will be 1,20,000 if I am not wrong. Please calculate. 390 divided by 650 into 2 lakhs. 1 lakh 20. Did you get it? Yes. Mr. B is the Karta of HUF whose members derive income as given below. Last question, okay? Income from B's profession will be taxable for whom? His neighbor or for him only? Income from B's profession taxable for B. Mrs. B salary as fashion designer. Who is earning more? Mr. A or Mrs. Sorry, Mr. B or Mrs. B? Mrs. B is earning more. So in whose total income the minor's income will now be clubbed? Mrs. B. Yes or no? So minor son D, interest on fixed deposit with a bank which were gifted by him by his, you don't have to see who has gifted the fixed deposit, what has happened. Is he earning income from his special skills or talent? No. So this is any other income of the minor will be liable for clubbing. 64 1A. In whose total income it will be clubbed? Mrs. A. Okay, no? Now, minor daughter P is earning from sports. Will it be clubbed? No. No clubbing will be done. D is winning from lottery. Will it be clubbed? Yes, absolutely. On the name of minor, if you will take your what? Winnings, then that winnings is also liable to be clubbed. Now wait. Minor son D's 2 incomes are there which are getting clubbed. Yes or no? 2 incomes are getting clubbed. And minor daughter's income not getting clubbed. Now tell me, minor daughter's income will be taxable for minor daughter only. No need to club. But minor son's 10,000 income is also getting clubbed and 1,95,000 winnings income also getting clubbed. For minor's income which is getting clubbed, 1032 exemption is available. 1,500. So will you take it from both the incomes 15 or any one income 15? Any one. Which one? Can you take it from winnings or you'll have to take it from FD interest? There is no restriction. Even if it is winnings income of minor, nowhere it is written that winnings income of minor will not be exempt up to 1,500. What, macha? And if you can take that 1,500 exemption out of winnings income, take it. No, you will save 30% tax on that. And 10,000 normal rates tax. First 2,50,000 no tax, then 5%, then 20, then 30. So instead of taking 1,500 exemption from that 10,000, take the 1,500 exemption from this winnings only. And this winnings is not your winnings. This is your minor son's winning, your minor son's income which is getting clubbed. So nowhere it is written that minor son's winnings income will be clubbed. That will not be allowed as an exemption. Even you can take 1,500 exemption from that winnings also. Getting my point? So 1032 exemption will be available from here. So 1,95,000 minus 1,500 will give you 193,500. This will be clubbed in the hands of Mrs. A. This will be clubbed and even this will be clubbed. Yes or no? So now what is Mr. Mr. B's income? That is 45. And what is Mrs. B's income? 76,000 plus 10,000 plus 193,500. Please add. 2,79,500. But they have not told you to calculate. They have told you to examine the tax implications. That's it. Examine the tax implication, whether taxable or not. If yes, then under whose hands, and after taking how much exemption. And that exemption you can take from both the incomes. From which income you are going to take? We are going to take from winnings. That's it. If they would have told you to calculate the total income, this should have been your total income. Got it? So friends, this is the end of your clubbing chapter. Tomorrow we are going to start with deductions and computation of total income. Okay? So see you tomorrow. Till then, bye bye.